Yes, students, we have completely done with section 9. Now we will march ahead for section 10. Whatever we have learnt in section 9, levy and collection of CGST, or section 5 of IGST Act, that is levy and collection of IGST. Guys, we call that as normal levy or normal scheme, where a person is supposed to do classification of goods and services. For example, assume I am supplying this pen. I need to check what is the rate applicable for this pen. Assume it is 18%. I need to pay 18%. Can I charge and collect it from my recipient? Yes, but I need to pay 18% on this goods, guys. Yes. Sir, now if I am under section 9, you are telling it is called normal scheme. Correct? A normal scheme. When should I pay tax? Every month. Every month I need to pay. And every month I am supposed to file returns, guys. Two returns as there. Or if I am a small supplier, they are telling you can file quarterly. But most of them will fall under monthly only. So let us discuss from monthly point of view. Okay. Guys, if I am under section 9, please listen. I need to pay tax every month. For whatever supply I have made in November, I need to pay GST in December. There is a deadline, 20th December. So any supply I have made in November, I need to pay GST on or before 20th December, guys. Okay. I should also file two returns. That is GSTR 1 and GSTR 3B every month. Plus one annual return in GSTR 9. We will discuss all this. We have a separate chapter for returns. We will discuss there. So I need to file three returns totally, two monthly every month. So 12 plus 12, 24 plus one annual return, 25 returns in a year. Okay. Plus I have to pay tax monthly. Now, if I'm a small supplier, this is too much for me, sir. This is too much for me, sir. Too much means what? Sir, complaints burden. And even rate 18%. Sir, how will I do the business, sir? If I add this 18% and sell it to the customer is telling, thank you. Anta. They are not coming back to me, sir. What will I do? So, to support the small suppliers, government introduced something called as composition scheme, where they told you need not pay tax monthly, pay tax quarterly. Because obviously every month it will be difficult for you. So pay tax quarterly and file a payment statement quarterly, not returns, payment statement. What you paid, tell us properly in payment statement and file annual returns. No monthly return, file annual returns. But two returns are there, annual returns. Okay. So no monthly return, no monthly payment, quarterly payment statement and annual return. And rate is, you need not worry about what is the rate applicable for your pen. I will tell you the rate given under section 10. You pay that much. That's all. They are telling that much. What is the rate, sir? 1%. 1%. See, if I am supplying the goods or services, if I am following section 9, then I need to check what is the rate applicable for my goods based on what? Classification. It might be 5%, 18%, 28%, 40%, whatever might be the rate. I need to pay that. But here they are telling, I don't care what goods you are supplying. 1% you pay. Whether you are manufacturing the goods and selling it or whether you are trading it, I will tell you 1% paid. But pay 1% out of your pocket. Don't collect it from your recipients. Sir, can I collect it from my recipients? No. They're telling, please pay out of your own pocket. And this is advantage, only 1%. But one disadvantage is you cannot collect it from the recipient. There is one more disadvantage. What is it, sir? On my inward supply, I cannot claim credit. On my inward supply, I cannot claim credit. Sir, what if I want to claim credit? Then go to section 9. Then go to section 9. Guys, composition scheme has its own advantages and disadvantages. And it is optional scheme. If I want, I can choose it based on my turnover. Last year, they told if your turnover is within 1.5 crore in last year, in the current year, you are eligible for composition scheme. Sir, what in the last year, my turnover is 2 crore, 5 crore, 10 crore. You are big enough to pay tax, go to section 9. Clear? So here it is available only for the small suppliers, guys. They have told is your turnover should be within some limit, only then you are eligible for. And one more disadvantage is I cannot assume I am a composite supplier. I cannot supply the goods outside the state. I cannot supply the services outside the state. That means wherever I am registered, I can supply only within that state. Guys, please listen carefully. I cannot supply outside the state. But can I have an operation in more than one state? Yes. For example, I can have my business in Karnataka and Tamil Nadu, two states. How many registration people? Two registration. But in both the states, I have to sell only within the state. Sir, can I sell from my Karnataka branch to Andhra Pradesh, Telangana? No, not possible. You become ineligible for composition scheme. Sir, in Karnataka, can I sell within Karnataka? Yes, no problem. Sir, in Tamil Nadu, can I sell within Tamil Nadu? Yes, no problem. The restriction is not to have business only in one state. You can have it in any number of states. But in every state, you have to sell only within that state. Sir, I am sending goods from my Karnataka branch to Tamil Nadu branch. Can I send? No, because it is an interstate supply. It will become interstate supply between distinct person even without consideration. Para 2 of Schedule 1. Correct? Yes. If you are separately registered, you cannot even send your goods from one branch to another branch. So plan accordingly. Plan accordingly. And one more thing. Sir, I have two branches, one in Karnataka, one in Tamil Nadu. Can I bring one branch under composition scheme and another branch under section 9? No, not possible. It should be all under 10 or all under 9. Cannot be 1 year, one there, or few year, few there. You cannot do that. Understood, people? Yes. So this is introduced to support the small suppliers, guys. Clear? Obviously, whenever they are giving you some benefit, it will be with some restriction or it will be with some condition. If you satisfy all this, then you are eligible for it. If not, no, sir, I'm not liking this. I want to claim credit. In that case, you can go to section 9. You can go to section 9. Guys, and similar thing we have it even in income tax. What was it? Under PGBP, we learned presumptive schemes. Section 44AD is for business. 44ADA is for profession. 44AE is for goods carriage business. For those people who is doing small business or profession, sir, for them it is difficult to know what is allowed, what is disallowed, to maintain books of accounts, to get it audited, it is difficult, sir. So that is why they told, if your turnover or gross receipts is within some limit, then we will allow you to follow presumptive scheme. You need not worry about what is your expenses, books, nothing. Just tell your sales, I will tell you what is your income. That's all presumptive schemes will tell. Correct? Yes. Obviously, it also has some limits and restriction telling if your turnover crosses this, then you are not eligible because they are covering only small people. Clear? Same way here, guys. In income tax, we call it as presumptive schemes, or under that, whatever we calculate is called presumptive income. Same way under GST, they're calling it as composition scheme, guys. Very similar to that. There also they are supporting small people. That is the person who is doing small business or profession. Here also they are supporting it. Yes, guys. Chalo. And here, they have given what are the rates under composition scheme. Sir, is it a part of our syllabus? Yes. Should we know it? Yes. I have given it here. You can see the rates under composition scheme is given here. Where is this rates given, sir? In section 10 only. Is it a part of our syllabus? Should we know this? Yes, you should know this. I told you under section 9, under classification, what we know, what we do for finding out the rates for goods or services. Sir, that rates is not a part of your syllabus. Under section 9. Applicable for different goods and services. But these rates are a part of your syllabus. So you have to remember it, guys. You have to remember it. Okay. Sir, what is it? Let me just explain, guys. See, in detail, we will go through whatever I have given, we will go through. But before that, I will just give you some highlight points. Most of them I already given, but still, I will repeat it once again with some more additional points so that you will get an idea, overall idea about composition scheme. Then we will go and read it. Okay. First, let us check the eligibility. Sir, is every person eligible for composition scheme? No. Whether I am eligible in the current year or not, I should check last year turnover. We need to check last year turnover, guys. For example, sir, in the current year, I am checking whether I am eligible for composition scheme or not. There are two composition scheme. One is under section 10.1 and 10.2 for RTM. RTM andre restaurant supplier, T trader of any goods, M manufacturer of any goods. Manufacturer of any goods. Okay. 10.2A is for those who are not covered here, they can come here. They can come here. Okay, sir. Now, manufacturer, trader, and restaurant services. Only one service is covered here. Okay. So, if their turnover in the last year is up to 1.5 crore, guys. Last year, how much? Up to 1.5 crore. In the current year, they're eligible for composition scheme. Whereas for some 8 special states, for 8 small states, they told instead of 1.5 crore, we will take the limit as 75 lakh. Which are those states? We will see later. Don't worry. Except these 8 states, the limit for all other states and union territory is 1.5. So if your aggregate turnover, which turnover, people? Aggregate turnover in the last financial year is up to 1.5 crore or 75 lakh. Then in the current year, you are eligible for composition scheme. That means, can I pay the tax at composition rates? Yes, but quarterly. Quarterly. Sir, what if I'm not doing any of this? For example, here anyway goods is covered, but I am providing not restaurant service, some other service, sir. Some other service, sir. In that case, for you, a separate scheme has been introduced. That is under section 10(2)(a). And 10(2)(a) clearly they told is for those who are not eligible for 10(1) and 10(2). Okay, sir. And for this, the threshold limit is up to 50 lakh for all the states. That is, if my turnover in the last year is up to 50 lakh, in the current year, I am eligible for composition scheme under section 10(2)(a). But the rates are different. Rates are different, guys. Here for goods, it is 1%, 1%. For restaurant, 5%. Whereas for other things covered under 10(2)(a), it is 6%. It is 6%. Okay, sir. Fine. This is about eligibility, guys. For eligibility, we will check which year turnover, people? Last year. Last year. And sometimes what happens, assume I am the supplier who is starting the business for the first time in the current year. What is my last year turnover? 0. Am I straight away eligible? Yes. I'm straight away eligible. Now assume I want to straight away take registration as composition supplier only. Can I take? Yes, you can take it. Or else, sir, last year I had already registered under section 9. But I am feeling too high rate, sir. I cannot pay so much, sir. Can I come under 10? Yes, you can move from 9 to 10. You can move from 9 to 10 provided you are eligible. Provided you are eligible, guys. Okay, fine. Now, some more points. Where are you? Here. Sure. Some highlight points I have just given it here, guys. So, assume I am the composition supplier who is registered under section 10. Okay. Now, on my outward supply, I should pay GST at what rate, guys? Composition rate. Where is it given? Under section 10 only. Under section 10 itself. I need to pay just that much. Okay. Whereas on my inward supply, who is liable to pay tax? Assume supplier. He will pay tax at composition rate or normal rate? Normal rate. Assuming he is under section 9, he will pay tax at normal rate. So he will charge and collect from me how much? Normal rate. Assume normal rate applicable for the goods is 18%. He will charge and collect 18%. Clear? If I am a composition supplier, for me composition rate is not applicable for my inward supply, only for my outward supply. Or else, assume, guys, I am the composition supplier. For me on my inward supply, RCM is applicable. What is applicable? RCM. So I should pay tax at normal rate or composition rate? Normal rate. Because on my inward supply, composition rates are not applicable. It is only for my outward supply. Now you might ask me, sir, what if my supplier is also registered under composition scheme? My supplier from whom I purchased also, he will pay tax at composition rate. But can he collect it from me? No, he cannot collect from me. Because composition suppliers cannot collect the tax from recipients, guys. Is that clear? Yes. So in simple, people, if I am registered under composition scheme, the rate on which I need to pay tax on my outward supply will be as per composition rate. Whereas for my inward supply, if at all, if RCM is applicable, I need to pay tax at what rate? Normal rate. But can I claim a credit of this? No, I cannot claim the credit because the composition supplier, for him, no ITC, guys. Okay, I have just given few highlight points here. Let us see. Pay GST out of pocket. That means I cannot collect this from my customer. I have to pay out of my own pocket. Cannot collect GST from recipient. So, what should composition supplier issue a document? Can he issue tax invoice to the customer? No, as he cannot collect the tax from the customer, he cannot issue tax invoice. Then he has to issue a separate document called bill of supply. Bill of supply, where only goods information or service information will be given. No tax. No tax. Okay. Next, cannot make interstate outward supply. That is sales. Guys, listen. Can I supply outside the state? No. Can I supply within the state? Yes. Restriction is only for sales. Sir, can I purchase from outside the state? Yes. But I cannot sell outside the state. I repeat, I cannot sell outside the state, but I can purchase from outside the state. Next, pay GST quarterly and not monthly, because the person who is under section 9, he will pay tax monthly, whereas this guy will pay quarterly. So burden will be reduced, guys. Why? Because every month I need not arrange money to pay GST. Here quarterly once I can pay that to lower rate. Next, file GST or returns annually, not monthly. annually. Two returns are there. That is GSTR 4 and GSTR 9A. Nothing much about this we will cover in this chapter, guys, because we have a separate chapter called returns. There we will learn about returns. Cannot claim ITC on inward supply. Now, even though composition supplier has paid normal rate on his inward supply, can he claim ITC? No. Now, this guy, can he pass ITC to his customer? No. He cannot collect tax from the recipients. No. Obviously, assume you are the person who has purchased goods from me. I am a composition supplier. Can I collect tax from you? No. Assume I have collected. Assume I have collected. So I have done a violation. Now, can you go ahead and claim ITC? No. You cannot claim ITC. First of all, I cannot collect. Assuming I have collected by mistake, can you go ahead and claim the credit? No, you cannot. You cannot claim the credit. You can see here. Cannot claim ITC on inward supply. Okay. And cannot pass on the credit to recipient. So for outward supply, can I pass on the credit to you? No, people. I cannot. Is that clear? Yes. Now you might ask me, sir, why will a person follow composition scheme? As we saw, there are few advantages. And you might also ask, sir, advantage actually. Now, if I am a person who is covered under section 9, assume I am a person who is covered under section 9. Okay, let me write it here. I am a person who is covered under section 9. Assume for 100 rupees, 18% GST is applicable. Sir, I will charge and collect it from the recipient, sir. Anyway, 18 rupees I will not pay. I will collect it from the recipient. Yes, fair enough. If your recipient is able to pay it, and if you are able to convince your customer and sell it, that's okay. No problem at all. But many a times, obviously, customer will see this as a cost. 18 rupees is a cost. Even though you explain them telling, no, 18 is for government. Okay, I earn only 100. 18 rupees what you pay, I will give it to the government. Customer will take, hey, for me cost is 118. You tell hundreds of the stories. I am paying out of my pocket 118. So that means cost is 118 for me. Is that clear? Assume there is someone who is my competitor, who is able to sell the product, same product at 110 or 105. Where will the customer go? Mindset is like that. Okay, Indian customers especially are too much price sensitive. Clear? So if they find the same product sold at a lower price, entire shift will happen. Complete shift. Not only they will tell all the neighbors also, yo, you went and purchased in that shop 118. Don't do. I purchased for 105. Go on. They will only do mouth to mouth advertising. Clear? So that will impact the business. And once the customer shift, it is very difficult, guys, to get back them. Okay. So now assume I am following composition scheme under section 10, where the rate is only 1%. So my selling price is 100 people. So on that 1% is the GST. How much is that? 101. Now I will collect from my customer 100 only. 1 rupee I will pay out of my pocket. It's okay. Let me pay. Correct. Instead of collecting 18 rupees from customer and remit it to the government, where customer will see it as a cost, better I will go with this. It helps the people to reach more customers, to increase their market size, especially in the initial stage of their business, guys. Hope you're understanding, because you might get a doubt. Sir, why should I follow section 10, sir? 9 is better, sir. Why? Even if it is 18% or 28%, 40%, I can charge and collect it from my customer. No, sir. Yes, provided they are ready to pay it. Most of the time, when especially you are a new business or you have launched your product for the first time, then you have to attract the customer through what, guys? Lower prices. Through lower prices. How will you price your product lower now? Maybe you follow composition scheme, where you will sell for customer. How much are you charging now? Only 100. 1 rupee you will only pay. It's okay. 1 rupee cost, no, fine, take care. Or else do one thing. Fix the selling price only 105. Don't tell this to anyone. Okay. Fix the selling price only for 105. Okay. On that, whatever 1% comes, pay GST out of home pocket. Now assume your competitor, substitute product is sold at 118. Whereas you are selling it same product at 105. You may attract the customers. You may attract the customers. Hope you understood. Okay, this is a strategy to keep your price as low as possible, especially in the initial stage, to attract more and more customers. Clear? But anyway, this and all you need not explain in exam. This is only to tell what is the advantage of section 10, guys. Okay, let us go back. Let us start reading the section. Composition scheme, section 10. Section 10 of CGST Act 2017 contains the provisions regarding composition levy. The objective of the scheme is to bring about simplicity and reduce compliance cost for small suppliers. Compliance cost, how do they reduce, sir? Guys, assume every month I need to pay GST and file returns. I should have a separate team for it. And team also might be big in size. 5 people, 10 people. And obviously they come with salary cost. Clear? So it is a costly affair for us. Small and what if I don't do? For example, I was supposed to file a monthly return. I was supposed to pay GST monthly, but I have not done on time. Then what happens, guys? Penalty, interest, late fee, all these things will come into picture. Small suppliers who have an aggregate turnover of up to 1.5 crore, when guys in the preceding financial year are eligible to opt for composition scheme. It is a voluntary and optional scheme. If I want, I will choose it. For example, sir, my turnover in the last year is only 60 lakh. Is it mandatory for me to follow composition scheme? No, no. If I want, I will follow. If not, can I follow section 9 only? Yes, it is a choice for you. For the states, namely, so what is the threshold limit, people? In the last financial year, 1.5 crore. But for some special states, they have made it half of it, with 75 lakh. For the states, namely Arunachal Pradesh, Manipur, Meghalaya, Mizoram, Nagaland, Sikkim, Tripura, Uttarakhand, aggregate turnover limit is 75 lakh. 75 lakh. Yes. So you can see I have also given like a table here. Guys, for 8 state, it is 75 lakh. Rest all the states and union territory, how much? 1.5 crore. I have also mentioned 3 states here. Why is it, sir? Guys, as per Article 279A, there are totally 11 special states. Do you remember? As per Article 279A, how many special states, people? 11. 3 topmost states plus 8 northeastern states. We learned it. But here, have they taken all 11 here? No, no. For section 10, there is only 8 special states. Means out of 11, they have taken only 8. Remaining 3 fall where? Here. I've just mentioned that because you should not get confused. For section 10, how many special states? Hello? 8. For Article 279A, how many special states? 11. So out of 11, they have taken only 8. Remaining 3 is under normal category here. Which are those 3? So Himachal Pradesh, Assam, Jammu Kashmir. In short, I have named them as Arch. Arch. Clear? Rest all will come here. Clear? 75 lakh, 1.5 crore. Okay. Sir, how to calculate this aggregate turnover? You told if the aggregate turnover in the last year is up to 1.5 crore, then I am eligible. For special states, up to 75 lakh, I am eligible. How do we calculate it, sir? What it should include, what it should not include? Very important definition. Very important definition, guys. Mark a star for it. Chalo, we will see that aggregate turnover. Guys, listen here. Aggregate turnover, what is covered in section 2 clause 6 is for the entire act, not only for composition scheme. This is for the entire act. So please be careful with it. Sir, what is aggregate turnover definition? We will see. Aggregate turnover means aggregate value of all, what and all. Taxable supplies excluding the value of inward supply on which tax is payable by a person on reverse charge basis. Guys, simple. Sir, what is aggregate turnover includes? Only my outward supply. Will it include my inward supply? No. Sir, on my inward supply, RCM is applicable, sir. I should pay a tax, sir. Still, it is not my turnover. Guys, turnover means what? Sales. It is nothing but sales. On my inward supply, if I am liable to pay GST, will it be my purchases or sales? Purchases. It is someone else's sales. Correct. But maybe they're asking supplier, you don't pay tax, let recipient pay it. Fine. Does it become my sales now? No. Even though RCM is applicable, it will not be counted in my turnover, guys. Clear? Yes. So simple. I've used the word taxable supplies. Guys, later I have given it is nothing but only outward supplies. Outward supplies. Okay. Then will it include exempt supply also? Yes. Aggregate turnover includes exempt supply. What is exempt supply they have defined? We will see that. Next, exports of goods or services or both, which includes zero rated supplies. Guys, actually export in GST is named as zero rated supply. In simple, export is called as zero rated supply. What is zero rated supply? They have defined in IGST Act, which we will cover later, guys. Then interstate supplies, that is outside the state, of a person having the same PAN Okay, that means we need to calculate all this pan-India based guys, not state-wise, pan-India based to be computed on all India basis, but excludes CGST, SGST, duty GST, IGST, and cess. So simple, aggregate turnover will not include any GST component, will not include any GST component. It includes only sales, that is within the state, outside the country, or even exempt supply. But I tell you, listen, for composition supplier, this too would be irrelevant, guys. Why, sir? Because he cannot sell outside the state. Clear? That is why I told you. This is the definition given not only for composition scheme, it is the definition given for the entire act. But assume if I am a composition supplier, sir, will this be relevant? Maybe not. Why? Because if I sell outside the state, I become ineligible. But this can happen. Assume last year I was selling outside the state, but in the current year I will not sell outside the state. In the current year, can I opt for composition scheme? Yes. While counting last year turnover, will interstate supply also be counted? Yes, because aggregate turnover includes interstate supplies. Is that clear? Means once I come inside section 10, I cannot supply outside the state. Last year, if I had supplied outside the state or outside the country, is it okay? So fine, no problem. But in your aggregate turnover, count that also. Count that also. Yes, in simple, I have given it in the equation form. Aggregate turnover is equal to what, people? Taxable outward supplies, exempt supplies, exports, interstate supplies of a person having same PAN. That is from one person to another person registered separately, even that is covered. For example, supply between distinct person. Sir, is it covered? Yes. Even without consideration, it is covered? Yes. Sir, how do we know the value? As per valuation rules. As per valuation rules. Anyway, that is not a part of your syllabus. Computed on all India basis, excluding GST and cess, guys. Excluding GST and cess. I will just give an example for it. Just observe. Observe. I have put one example here. I have just given amounts here and the nature of the transactions. We need to check whether it will be covered in aggregate turnover or not, guys. One by one. Taxable outward supply, 30 lakh itself. Is it a part of aggregate turnover, people? Yes, it is a part of aggregate turnover. Next, CGST and SGST on the above, that is on 30 lakh, that 10% I have taken, which is 3 lakh. Should it be a part of aggregate turnover? No, it will not be a part of aggregate turnover. So I have mentioned nil in the last column. Next, inward supply taxable under RCM, 5 lakh. Will that be a part of aggregate turnover, people? No, it is my purchases, it is my inward supply and not outward supply, not to be counted. Next, exempt supply, 10 lakh, on which I am not liable to pay GST. But is it a part of aggregate turnover, people? Yes. So 10 lakh. Next, export, 15 lakh. Is it a part of my aggregate turnover? Yes. Interstate supplies between distinct person, that is, who is registered separately. Is it a part of aggregate turnover? Yes, 6 lakh. So what is aggregate turnover as per section 2 clause 6, guys? 61 lakh as per my example. As per my example. Did you guys get it? Understood? Guys, you guys can get a question on this only on aggregate turnover calculation. Clear? Assuming this is my last year turnover. People listen. Assuming this is my last year turnover. In the current year, am I eligible for composition scheme? Yes, I am eligible. I am eligible. If I am from a normal state, limit is how much? 1.5 crore. It is within 1.5 crore. Assume I am from special state where 75 lakh is the limit applicable. Still I am eligible, huh? Yes, I am eligible. Is that clear? One more time clarity. Guys, last year, if I have made export or interstate supply, okay, no problem. But in the current year, once I come under composition scheme, can I do both of this? No, not possible. If you do this, they will throw you out of section 10. When they throw you out of section 10, what should you do? You find a home in section 9. Okay, you find a place in section 9. Means immediately you have to switch from section 10 to 9. Once a person become ineligible under section 10, immediately I have to switch to section 9 on the same day. On the same day, they have to switch to section 9, guys. Okay, hope you guys got it. You can take down this later. I will give time. Okay, this is aggregate turnover definition. Guys, at the beginning of this chapter, I had given few definitions. Come to that point. Beginning of the chapter. Relevant definitions. In page number 33. Page number 33. Okay, I have given the aggregate turnover definition here. Let me read it. Guys, see how I have given there is point wise. But definition is not given point wise. They have given it as a paragraph. But if you read like this, you might get confused. That is why I have given there as a bullet point. Study like that. Now you will be able to frame it as a sentence. Let us see how exactly the definition is given. Aggregate turnover means the aggregate value of all taxable supplies, excluding the value of inward supply on which tax is payable by person on reverse charge basis. Guys, can I tell this first sentence is nothing but only my outward supplies? Only my outward supplies? Yes, sir. Exempt supplies, exports of goods or services or both, and interstate supplies of person having the same PAN be computed on all India basis, but excludes central tax, state tax, union territory tax, integrated tax, and cess. So all this should not be included. Turnover will not include GST component or cess component, guys. Hope you guys got it. And it should always be calculated on all India basis. Please listen here. This is important actually. Listen, guys. Assume I want to follow composition scheme. Now I have operations in Karnataka, Tamil Nadu, and Andhra Pradesh. AP. Andhra Pradesh. Okay. Can I do business in more than one state, Savita? Can I do? Yes. I can do business in more than one state, but I cannot supply outside the state. Now, I want to check in the current year, am I eligible for the composition scheme or not? For which I need to check which year turnover? Last year turnover. So assume last financial year, guys. Turnover of each state I will give you. 20 lakh, 22 lakh, and assume 18 lakh. 18 lakh. So what is the total turnover, people? 60 lakh. Correct? Hello? 60 lakh. Now, am I eligible for composition scheme or not? Should I see the turnover in each state or aggregate? Aggregate. How much is aggregate? 60 lakh. So my aggregate turnover in all the states put together, that is in India, in simple, is 60 lakh. Am I eligible for composition scheme now? Yes. Now, can I follow composition scheme only in Karnataka? No, I have to follow in all the three states. It is all in or all out. All in or all out. Hope you understood. For example, assume I want to follow for Andhra Pradesh normal scheme under section 9. Can I do it? No. You take all three branches under section 9 or all three branches under section 10. Either of the one, guys. Is that clear? So what I am telling is, when we are having a branches in more than one state or having operations in more than one state, aggregate turnover is not only for one state, it is for all the states put together, guys. Is that clear? But normally how we calculate is, we will calculate branch wise. Later we will aggregate it. We will aggregate it. So for checking, we should always look for aggregate figure, not individual figures. Okay, sir. So fine. And here they use the word exempt supply. Sir, what is that, sir? What is that? They have defined that also. Let us see. Where are you exempt supply? Here. Exempt supply. One of the important definition again. Next chapter is all about this only. Exempt to exempt to exempt. Okay, separate chapter for this. Okay. We'll just see what is exempt supply now. Exempt supply section 2 clause 47. Exempt supply means supply of any goods or services or both which attracts nil rate of tax or which may be only exempt from tax under section 11 or under section 6 of IGST Act. Both talks about exemptions only and includes non-taxable supply. Guys, exempt supply will include three things. What are those? Nil rated supply, actually exempt supply, and non-taxable supply. Clear? It includes three things. All falls under exempt supply? Yes. Fine. More about this, guys, I will not explain in detail now. More about this, I will cover it in next chapter because next chapter is all about exemption. Okay. But, sir, at the end, they used one word, non-taxable supply. Again, what is that, sir? What is that, sir? They have defined it. From one, we are taking another. Non-taxable supply means what? Section 2, clause 78 of CGST Act. Guys. Let me tell it in simple. Non-taxable supply means which is outside GST. Which is outside GST. Then exempt supply means what? Exempt supply includes non-taxable supply. But their exempt supply includes exempt and nil rated. What are those, sir? Simple. Those are the products which are covered under GST but exempt. Or those are the products which are covered under GST but the rate is nil rate. Clear? And in the GST, they are using two terms. Nil rate is different, zero rated is different. Sir, what is this, sir? You don't know math. Nil is same, zero is same. Yes, for me it is same only. But in GST law, nil rate supply is different, zero rated supply is different. Clear? Zero rated supply covers exports, whereas nil rated supply means, sir, it is supplied within the country, within the state, or within the country, domestic. But the rate applicable on that is nil rate, sir. Nil rate in the sense zero rate. Yes. Is that clear? So more about this, again, I will be covering it in the coming classes, guys. Okay. Let us see non-taxable supply. Non-taxable supply means a supply of goods or services or both, which is not leviable to tax under CGST Act or IGST Act. Examples of supply not leviable to tax are, what are those? Outside the GST. Alcoholic liquor for human consumption and PhD man. Hello, PhD man. 5 petroleum products. Is it covered under GST? No, completely outside GST. I cannot call it as exempt. See, it is a part of exempt. But is it actually exempt? No. Exempt means what, people? Something which is covered under GST, but you need not pay tax on it. You need not pay tax on it. Is that clear? Yes. For example, let us take it as agriculture crops. Clear? Yes. So it is covered under GST, but sir, it is exempt. We will see what are the things which are exempt under GST. We will be learning it in next chapter. What is actually covered for you is services which are exempt under GST. Goods, they are not covered under your syllabus. Okay. Hope you understood. I repeat, guys. Exempt supply includes three things. What are those? Nil rated supply, only exempt supply, plus non-taxable supply. What is exempt is given in section 11 of CGST Act or section 6 of IGST Act. Both talks about exemption. What is nil rate means? Guys, covered under GST, taxable low, but rate is nil low. Whereas non-taxable supply is, sir, not at all covered under GST. Not at all covered under GST. Okay. We have some more definition. We'll just finish it off, guys. Most of the terms we already discussed this. Yeah. E-commerce operator. E-commerce operator, section 9555. Clear? Who is he? E-commerce operator means any person who owns, operates, or manages digital or electronic facility or platform for electronic commerce, like Amazon, Flipkart, or else we discussed a lot of things. What are those, sir? Uber, Ola, Swiggy, Zomato, or Airbnb. All these are e-commerce operators, guys. Next, reverse charge. Under reverse charge, who is supposed to pay tax, people? Recipient. We already discussed all this. We are just seeing the definition given in the law. 298. Reverse charge means the liability to pay tax by the recipient of supply of goods or services or both. Instead of supplier of such goods or services or both under section 93 or 94 of CGST Act or 53 or 54 of IGST Act. When supplier is liable to pay GST, what do we call that mechanism as? What do we call that mechanism as? Forward charge mechanism. Oh. Next, taxable supply. Taxable supply means a supply of goods or services which is chargeable to tax under CGST. In simple, which is not exempt. Which is not exempt. So what is not exempt? Will come under what, guys? Taxable supply. Okay. On which a person is liable to pay tax. Which person, sir? Either the supplier under forward charge or the recipient under reverse charge. Okay. Last one. Who is taxable person? Taxable person. 2 clause 107. One of the important point, guys, because they have used this word number of times in the law. What is taxable person? Section 2 clause 107. Taxable person means a person who is registered or liable to be registered under section 22 or 24. 22 or 24. Now, sir, I was not supposed to take registration. It was not mandatory for me. But still, I voluntarily went and took it. I voluntarily went and took the registration for whatever purpose might be. Am I called as a taxable person now? Yes. Now I cannot take a protection telling, no, I was not liable, still I took. Sir, from the day you are taken, you are called registered person. Please pay tax. Now, next case. I was liable to get registered. I am covered under mandatory registration. But still now, I am not taken. Am I called as a registered taxable person? Yes. I might not be called as registered person, but I am called as taxable person. From what day I am liable to pay GST? From that day I became liable for registration. My liability will start, people. Is that clear? If you remember, we covered section 9.1 and 5.1. There, who is supposed to pay tax? Last word. Last word. Who should pay tax? Taxable person. Taxable person. Do you remember I made you to write supplier? So supplier is means which scheme? Forward charge mechanism. Clear up. Well, because 9.3 and 9.4 will tell recipient, you pay the tax. Is that clear? Yes. So when 9.3, 9.4 clearly tell recipient, you should pay the tax. That means 9.1 is for whom? People? Supplier. Under forward charge. Okay. We saw all the definition. Come back now. Come back to composition scheme. Composition scheme. Yeah, what are the rates covered under section 10.1? This is for RTM, not RCB. RTM. Sir, lot of things connected to RCB. RCM, RTM. Yeah. Tax rate for different categories of registered person under the composition scheme is as follows. What are those guys? If you are a manufacturer of any goods, but other than few goods, means they have told if you are a manufacturer of back tip, what is it? If you are a manufacturer of back tip, BATTIP, okay, now then you cannot opt for it. What are those products? We will see. It is a shortcut given by me, back tip. Okay. So if you are a manufacturer of any goods other than back tip, you are eligible for this. Okay. What is the rate applicable? 1% total. Or if you take up a breakup, CGST 0.5, SGST 0.5. 1% of what, people? Turnover in the state or union territory. Turnover of the state or union territory. Okay, sir. Next, restaurant services. Or else let us come to trader. Any trader is eligible. Supplying any goods. Who is trader? Who buy and sell. Who is manufacturer? Buy raw material, manufacture output and sell it. Okay. Trader of any goods, guys. Any, including back tip. Including back tip. What is the rate? 0.5, 0.5 or total 1%. 1% of the turnover of a taxable supply. Underline the word taxable here. Something extra is given. Of goods and services in the state or union territory. Means, guys, if you are a manufacturer, you have to pay tax at what rate? 1% of your total turnover. But if you are a trader, you have to pay tax at 1% of what? Taxable turnover. Taxable turnover. Okay, I will explain this. We have a note for it. I will explain. First, let me finish one more. Restaurant. In between, one service is there. What is it, sir? Restaurant service. Only one service. Whereas goods and all, any goods. Clear? Yes. Restaurant services, that is the suppliers of food, drink for human consumption other than alcoholic. Because why, sir? Alcoholic liquor for human consumption is completely outside GST. So if it is a bar and restaurant, is it covered here? No, only restaurant. Correct? Yeah, questions? Huh? Chalo, 2.5, 2.5. What is the total rate? 5%. 5% of the turnover in the state or union territory. 5% of the turnover, guys, if they use only the turnover means what turnover? Total turnover. Whereas for trader, they told taxable turnover. Sir, did you give by mistake, sir? So what, sir? Uniformity is not there. For two places, turnover, whereas last case, taxable supplies. Why is it, sir? That is how it is given in the law. That is how it is given in the law. What is that notes we will see? Here you can observe. Turnover in the case of traders has been defined as what, people? Turnover of taxable supplies of goods. That is for trader. Thus, for traders, exempted supplies would not be added in the turnover for the purpose of levy of 1% composition levy. Guys, simple. Trader means you will pay 1% only on your taxable turnover. Whereas, if you are a manufacturer, you have to pay 1% on your total turnover, which includes exempt supply also. That means they have to pay tax on exempt supply also. Yes, 1%. For say section 10, they are telling, sir, the taxable at exempt, we don't care, pay 1% of your total turnover. That is 1% of your aggregate turnover. That's all, get lost. Even if you are a restaurant supplier, you need to pay 5% on what? Total turnover. Total turnover. Students may note that while aggregate turnover of preceding financial year is relevant for the purpose of determining the eligibility to avail composition scheme. The tax has to be paid at applicable rates on the turnover or turnover of taxable supply, as the case may be in the current tax period. Current tax period. That means this rate, I will apply it on last year turnover, current year turnover, people. Current year, you will pay tax not for last year, current year. But here you spoke about last year turnover. No, sir, that is only to check eligibility. Can you come inside or not? I need to check based on what? Last year turnover. Why not this year turnover, sir? Because this year turnover only you will get to know at the end of the year. Can we wait till the end of the year to know? Can you get in or not? By the end of the year, you are already out. Correct? So you cannot wait till the end of the year. So that is why to check Kumar Swami eligibility, to check eligibility, you have to check last year turnover. Whereas to pay tax, you have to check current period turnover. And here, guys, for composition scheme, tax period means what? For composition scheme, tax period means what? Quarter. Underline and write. Quarter. Quarter and write time period. QUARTER. I repeat, QUARTER. Quarter. Quarter will have how many months? 6 months. 3 months. Chalo, because, hello, 4 quarters, but months will be 3. Chalo, listen. We need to pay tax under section 10 every month or every quarter? Every quarter. So that means we need to calculate turnover every quarter? Yes. We need to calculate the turnover every quarter, pay tax. Manufacturer and restaurant supplier will pay tax on what, people? Total turnover. Whereas trader on taxable turnover. Tax is payable even on exempted supply, except trader in goods, because trader will pay only on taxable supply. So little confused, sir. Okay, fine. Let me explain that with an example. Little confused. Okay, let me clarify. Assume this is the turnover for a quarter in the current year. In the current year for a person. Taxable turnover 40 lakh, exempt turnover 20 lakh. So what is the aggregate turnover, people? 60 lakh in the current year, in a particular quarter. 60 lakh. Now, if I am a manufacturer, I have to pay GST on what amount? 60 lakh into 1%. What if I am a trader? I should pay tax on what figure? Only 40 lakh. On 40 lakh, how much? 1%. Assume I am a restaurant supplier. Then I should pay GST on what amount? 60 lakh, 5%. 60 lakh, 5%. Hope you guys are getting it. Hello? Chalo, please be careful. Only for trader we will take taxable turnover. For the other two people, we take total turnover. Total turnover here is nothing but aggregate turnover. Sir, aggregate turnover will include export to outside the state and all. No, sir. No, sorry. Once you are under section 10, you cannot do it. You cannot do it. But in the definition, it is there. I agree. In the definition, it is there. Sir, export to interstate and all is there. But once you come under composition scheme, can you do this, people? No. So obviously your turnover should include only this or this. That's all. Only this or that. Whereas last year, can I do this, sir? Yes, fine. But once you come under section 10, you cannot supply outside the state, people. Common sense, correct? Yes. Because after seeing the definition, sir, you might ask, what if this comes? This cannot come. In the current year, this cannot come. Correct? Yes. Sure. Third note. Third note is important, people. Assume, please listen. Assume I am providing any of the three things. RTM. What is RTM stands for? Restaurant, trader, manufacturer. I am doing any of this. Am I eligible for composition scheme under section 10? Yes, sir. Good, fine. But now, Ullas, I want to start some small service other than restaurant. Assume consultancy or advisory. I want to start consultancy or advisory. Is it covered under 10? No, they are not covering it under 10. But they told, if you are doing this, along with that, if you do this consultancy or advisory, then if it is marginal service, means small service, we will allow you. We will allow you. Means even this, can I bring it under section 10? Yes, they told, okay, no problem. But how much small it should be, so? How much small it should be? They are calling it as marginal service. They told, take your last year turnover. Assume my last year turnover was 100 lakh. The turnover from this service cannot be more than 10% of that. So 10% of 100 lakh comes to how much people? 10 lakh. Or they have put one limit, 5 lakh. Whichever is higher people, 10 lakh. Now, listen here. The turnover from this additional service, which I call it as consultancy or advisory or any other service, but not restaurant, cannot exceed how much people? 10. Assume the turnover from this advisory is only 6 lakh. Can I bring even this under section 10? Yes. Even this 6 lakh I can bring under section 10. How much tax should I pay? So, guys, simple. Listen here. If you are a restaurant person also providing advisory, what is the GST rate applicable for you? For restaurants, 5%. Even for this, 5%. Assume you are a person who is a manufacturer. For manufacturing, what is the rate of GST? 1%. Even for this 6 lakh, 1%. Clear? So, whatever is your main supply, on that, what is the GST rate under section 10? Same rate would be applicable even for your marginal service. Is that clear? Sir, what if by chance the turnover from this is 12 lakh? 12 lakh. That means this becomes ineligible. Hello, this becomes ineligible for composition schema. Yes, entire business has to go out. Not only advisory, entire business. Why so? Because if one of my business cannot follow section 10, take all your businesses outside. Take all your businesses outside, guys. Sir, for one business I will follow section 10, for another business I will follow section 9. Sorry, you cannot. You cannot. Same thing I told for branch also, no? For one branch, section 10, for another branch, section 9. Is it possible? No. Same way. For one product, 10, for another product, 9. Not possible. So you have to take all under 10 or all under 9 people. Is that clear? Yes. Let me read that provision. 3. Actually, this third note is given in the proviso. There are cases where a manufacturer or trader is also engaged in supply of services other than restaurant service, though the percentage of such supply of service is very small as compared to supply of goods. So supply of goods, your main supply is what? Either of RTM. There may also be a cases where a restaurant service provider is also engaged in supplying a small percentage of other services. In order to enable such taxpayers avail the benefit of composition scheme, the following proviso has been inserted. What is it? The proviso permits a registered person opting for composition scheme to supply services of a specified value not exceeding, means from that marginal service your turnover cannot exceed this much. How much is that, sir? 10% of the turnover in the state or union territory in the preceding financial year, or 5 lakh, whichever is higher, means minimum 5 lakh. They're telling minimum 5 lakh. Guys, listen here. This is over and above RTM. Over and above RTM. For example, sir, I am engaged in RTM. Along with that, I want to provide one more service, sir, which is not restaurant. Can I bring that also under this? Yes. But what if I am providing only advisory, only consultancy? Then 10-1, I am not at all eligible. For me, there is one more composition scheme, which is 10-2A. I can go and check that. Clear? Guys, only service other than RTM. Other than RTM means I am not engaged in RTM, only other service, consultancy, advisory, or I have a saloon shop or tailor shop. Can I bring it under 10-1? No. Go and check 10-2A. Go and check 10-2A. This proviso is for whom people? Sir, I am already doing RTM, sir. I am already doing RTM. Along with that, I want to do one small service, sir. Can I do it, sir? Yes, we will allow it. Why? Because, guys, many people, when they're selling goods, they do repair also. They do the service also. For them, they brought this. Correct. For example, assume I am selling laptop. I also do laptop service. So, selling laptop is my main product. Yes. Can I take selling of laptop under section 10-1? Yes. But now, I also provide service, sir. Whenever you have any problem, you will bring it to me. Like I would have given some guarantee, warranty and all within 1 year, that year. So if you have any problem, you will bring it to me, I will repair it. Now, if this proviso was not there, for the service, I cannot follow 10-1. When service is not eligible for 10-1, even sale of laptop is not under 10-1. So I have to go out of 10. So that was the situation. So that is why government brought this, thinking, okay. Because normally who sell goods also, they may provide one small service. Clear? So you can attach both under section 10.1 itself, people. Yeah. While computing the value of services other than restaurant service, as referred in this proviso, interest on loan, deposit, advance will not be taken into account. In short, I call it as financial service. Guys, simple. They're telling the services will not include financial service. What is that financial service, sir? I am giving loan and advance for you. In return, I am charging you interest or discount. Actually, this service is exempt under GST, which we will learn in next chapter. They're telling, if I am providing this financial service, should it be within this limits? No. You can provide how much ever you want. I repeat, sir, the additional service what I am providing is a financial service, sir. Is there any limit for me that I have to provide within 10%, within 5 lakh and all? Nothing. There is no limit for it. So while counting this limit as per this proviso, financial service will be completely excluded, guys. It will be excluded. Okay, sir. We have an example for this proviso. Let me see. Rama is engaged in the manufacture of goods. His aggregate turnover in the preceding financial year is 60 lakh. Guys, is he eligible for 10.1 compensation scheme? Yes. Last year turnover is how much? 60 lakh. And one more thing, if by chance, if the question doesn't specify about the state, what is the turnover limit you will consider? 75 lakh, 1.5 lakh? 1.5. 1.5. If they mention the state, accordingly consider it. But chance in the question, they are not given the state. What should I consider, sir? 1.5 or 75? 1.5. Because for majority of the states, 1.5 is applicable, guys. Because only for 8 states, it is 75 lakh. Fine. Chalo. Rama is engaged in the manufacture of goods and his aggregate turnover in the last year is 60 lakh, guys. Is he eligible in the current year for compensation scheme? Yes, sir. Since his aggregate turnover in the preceding financial year does not exceed 1.5 crore, he is eligible for composition scheme in the current financial year. Further, in the current financial year, he can supply services other than restaurant. Up to what amount? He can see for restaurant there is no limit. Up to 1.5 you can supply. But for if it is other service other than restaurant, can you supply how much ever you want? No. How much? Not exceeding. Last year turnover is 60 lakh. 10% of that comes to 6 lakh. Or 5 lakh, whichever is higher, 6 lakh. Thus, he can supply services up to 6 lakh in the current financial year. If the value of services supplied exceeds 6 lakh, assume let us take it as like legal services. Can he provide legal services in the current year? Yes, up to 6 lakh. What if it crosses 6 lakh? Then he becomes ineligible for composition scheme under section 10.1 and he has to opt out of composition scheme, guys. Immediately, please move out. Immediately, please move out. Only for my legal services or entire business? Entire business. Got it right? Yes, very easy, guys. See, lot of points are there, but very easy. Clear? Yes. I will give one example for this also. Listen, this is for that proviso part. Proviso part. Assume the turnover in the last financial year is 40 lakhs from RTM. RTM means you know na? Okay, last year I was engaged only in RTM. The turnover is 40 lakhs. In the current year, I want to provide some additional service other than RTM. Can I provide? Yes. Up to how much? 40 lakh into 10% comes to how much, people? 4 lakh. Or 5 lakh, whichever is higher. 5 lakh. So up to 5 lakh, can I provide any marginal service? Yes, sir. I can provide. What if it crosses 5 lakh? Then I have to go to section 9. One more example. Assume last year my turnover is 80 lakh from RTM. Okay. But in the current year, I want to start some marginal service. Can I start? Yes. Up to what amount can I provide that marginal service? 80 lakh into 10%, which comes to 8 lakh. Or 5 lakh, whichever is higher. 8 lakh. Higher, not lower. Please be careful. Higher. Minimum is 5 lakh. Oh, 8 lakh. So can I provide in the current year marginal service up to 8 lakh? Yes, I can provide. Hope you understood. Guys, questions are asked on all this. Please be careful. We will see what are the kind of questions they're asking. We will see that. But obviously, you will know how to write the answers only if you know the provision. First, let us be the thorough or master of the provision. Then we will go and apply it in the questions. Okay, sir. Fine. So just make a note of whatever we have discussed till now, guys. I have given few examples, everything. So I just want you guys to quickly make a note of it, including this. This is just to give a highlight or overview about composition scheme, guys. First one. Next, you can take aggregate turnover. Just give an heading which I have mentioned here and then take down. Then this is turnover to pay GST separately for manufacturer and trader. Then this is as per proviso. This is as per proviso. Now we will see who are the persons who are not eligible for composition scheme. Guys, the following people are not eligible for composition scheme. Where is it given? Under section 10(2). But before that, you guys just write for this proviso. You should not get confused. For this third note, you can just mention, I guess, where you have a space here. Okay. RTM plus marginal service. Means you are already engaged in RTM. Along with that, you want to provide some other small service. Marginal service is nothing but small service. Guys. Sir, only what if it is only service, which is not restaurant? Then you cannot follow this. You cannot follow this, guys. Okay, chalo. Let us see. Guys, whatever is given here is in section 10(2). But these people are not eligible for what? 10(1). Who is not eligible for 10(1) is given in 10(2). Who are those? A person engaged in the supply of services other than the supply of restaurant service. Because restaurant service is covered there, but not other service. But exception is what? Marginal service. Marginal service means you can do RTM along with other service. Other service. Sir, what if it is only other service? Then you are not eligible for 10(1). For example, sir, I am providing only audit service, consultancy service, or accounting service. Am I covered under 10(1)? No. Next. A person engaged in the supply of goods or services which are not leviable to tax under this G Act, that is outside GST, guys. In simple, non-taxable levy. Non-taxable supply we covered. What are those? Alcoholic liquor for human consumption, PhD man, correct? Yes. So assume I am engaged in supplying petrol, or I am engaged in supply of alcoholic liquor for human consumption. Can I follow composition scheme? No. Sir, one more thing. I am supplying alcohol along with restaurant service. Can I follow composition scheme? No. They told if you are supplying any one of the non-taxable supply, you are outside composition scheme. You are outside composition scheme, guys. Yes. If you want, you can just mention there non-taxable supply. Non-taxable supply. NTS. Non-taxable supply. Non-taxable supply. Okay. Next, C. A person engaged in making interstate outward supplies of goods or services. Guys, underline that. Interstate, outward. Interstate. Hello. Interstate, outward. Sir, can it be inward? Yes. They didn't put restriction for inward. Means, can I purchase from outside the state? Okay. Can I sell outside the state? Not okay. Not okay. Yes. A person engaged in making supply of services through electronic commerce operator who is required to collect tax at source under section 52. Means if you are a supplier who is supplying services through e-commerce operator, on which e-commerce operator is supposed to collect TCS. As a supplier, can you follow composition scheme? No. They told no. Sir, what is it? I will just tell you. Just a minute. I have one chart for it. Yeah. Observe here, guys. Did we cover RAT services under section 9(5)? Yes. If you are a supplier who is supplying RAT services through e-commerce operator to a recipient, who should pay tax on this RAT services, guys? E-commerce operator. Except in few cases where supplier is registered or specified premises under, supplier will pay. Correct? Yes. But now, sir, what if it is other than RAT services? Other than RAT services. That is the next part. Supplier supplying services other than RAT. Okay, means anything other than RAT. In that case, who should pay tax, sir? Supplier has to pay tax. Under what? So, forward charge mechanism. In that case, they are telling e-commerce operator, you will collect the money from recipient, right? Yes. And then give it to supplier, right? Before giving it to the supplier, you will deduct commission, right? Yes. Along with that, collect TCS also on behalf of the government. On behalf of the government. Hope you understood. I repeat, e-commerce operator is just providing the platform for the supplier to sell the services or to provide services to the recipient. Now recipient will pay to whom? E-commerce operator. E-commerce operator will collect the payment and give it to whom? Supplier. So when he is paying to the supplier, he will collect his commission. He will deduct it. They are also telling, please collect TCS also. But this is not for e-commerce operator. This is for whom? Government. Whatever TCS he will collect, he has to deposit it to the government, guys. Government. Okay. For this, we have a separate provision under section 52. We will learn it in TCS. Now, what I'm trying to teach is the person who is supplying services other than RAT through e-commerce operator, on which e-commerce operator has to collect TCS. No, they are not eligible for composition scheme. They are not eligible for composition scheme. Did you understand? Yes. Got it? No? Yes. So please be careful. I'm not talking about RAT services because on RAT anyway, this guy is the one who is liable to pay tax. I'm talking about other than RAT services. Other than RAT services. Who is liable to pay tax? Supplier and a forward charge. Can you opt for composition scheme? They're telling no. They're telling no. E-commerce operator is supposed to collect TCS on this transaction. You are supposed to pay tax as per normal scheme. Who? Supplier. Is that clear? And please be careful. What is covered here is only services. Sir, what if I supply goods through e-commerce operator? Can I follow composition scheme? Yes, because they restricted only services but not goods. Only services but not goods. You can observe there. Please understand, because most of the place they use the word goods to services, and you will be used to it. You will be used to it. Here also, even though they have given only services, you will read it as goods or service. Goods or service. So that is why I am stressing on it. You can underline that. Only services. Only services. Okay. That means if it is a goods, is supplier eligible? Yes, he is eligible. Provided he satisfies all other conditions. Next, a person who is engaged in the manufacture of aerated water, ice cream, tobacco products, pan masala, fly ash bricks or fly ash aggregate, fly ash blocks. Ash means you know, na? Budi. Bricks of fossil mills or similar siliceous earths, building bricks and earthen or roofing tiles. In short, I call them as bat tip. In short, I call it as bat tip. Vikram, you know bat tip? Battige tip iruttalo. Adu. Chalo. So, sir, what is the full form of all this? Bat tip. I will pronounce that. Please listen. B stands for bricks or blocks. Bricks or blocks. A for aerated water. T for tiles. Another T for tobacco. I for ice cream. P for pan masala. Clear? Remember like this. Because if they use any of this, you should know it is a specified notified goods gas. And only manufacturer of this is not eligible for composition scheme. Sir, what if I am a trader of bat tip? What if I am a trader of bat tip? I am eligible. I am eligible. Now come back to this table. Table. In the same chapter, don't go to some other chapter. Here, can you read that first point? Manufacturers, other than the manufacturer of goods as may be notified by the government. So which are the goods notified by the government? Bat tip. Bat tip, people. Right here. Bat tip. So if I am a manufacturer of bat tip, can I follow composition scheme under section 10.1? No, sorry. You cannot. You cannot. Whereas for trader, was there any point like that? No. You can observe trader or any other supplier eligible for composition scheme. So trader of any goods under the sky, they're eligible. And any goods under the sky, let me not use that word, because non-taxable supply is outside. Clear? Non-taxable supply is outside. Anything which is covered under GST, if you are supplying it, you can follow composition scheme. Please be careful, guys. They're testing on small things like this. For example, they will tell Vikas is a trader of ice cream. He wants to follow composition scheme. Can he? Kumarswamy, can I? Huh? Correct. Exclusively for you. I will tell. Lift your head. Vikas is a trader of ice cream. Kumarswamy, Vikas is a trader of ice cream. Can he follow composition scheme? Yes, he can follow. Now, Akarsh is a manufacturer of pan masala. Beka. Well, pan masala. Can he follow composition scheme? No, he cannot. Chalo, last one. Casual taxable person and non-resident taxable person. So they cannot follow it. Sir, who are these people? Guys, these are the two people covered under GST. I will cover them in registration chapter. I will cover them in registration chapter. You can just mention section 27. Because these two people, I will be covering it in section 27. In simple, remember them as two special people. Can they follow composition scheme? No. No matter what they are supplying. Let them supply anything under GST. They are not eligible for composition scheme, guys. Yes, sir. So this is all about composition scheme. Till now, whatever we have covered is only two sections, 10.1 and 10.2. Eligible for only which schemes, which products or which service people? Only three. What are those? RTM, restaurant, trader, and manufacturer. But only few manufacturers are excluded. What is it? Bad tip. Sir, along with this three, can I also provide any other small service? So, yes, which is called marginal service. It should be within 10% of last year turnover or 5 lakh, whichever is higher. And guys, RTM I have given. You can also remember it as MTR. You know MTR? Okay, MTR, famous restaurant. You can remember like that or RTM, however it is convenient to you. Yes, we are done with this. We will take a break. After break, we will get into 10.2A composition scheme. Yes, students, we will continue now. We have seen one composition scheme under section 10.1 as well as 10.2. Now, whoever is not eligible for 10.1 and 10.2 can opt for 10.2A. Guys, please be careful. The doors for 10.2A is open only for those for whom door under section 10.1 is closed. Understood? If I am eligible for 10.1, can I come and follow 10.2A? No, I cannot. I have to follow 10.1 only. Now, sir, who is eligible for 10.2A? Simple, guys. Now, I am providing only service which is not restaurant. For example, I am a practicing chartered accountant providing bookkeeping, auditing, and other consultancy services. So, is my service covered under 10.1? No. So, I have to bring it under 10.2A. Or else, I am having, assume, small tailor shop, or I have a small saloon shop, which comes under services, but not restaurant. So, where should I take this? Under 10.2A, guys. So, simple, any service which is not covered under 10.1 should be covered under 10.2A. What is the rate here, sir? 6%. And here, how do we check the eligibility? My last year turnover should be up to 50 lakh, not 1.5 crore. That is for 10.1. For 10.2A, my last year turnover from my business or profession should be up to 50 lakh. And here, in the current year, can I pay tax under composition scheme? Yes. What is the rate, guys? 6%. 3 plus 3. 3% CGST, 3% SGST. And condition, restrictions, advantages is everything same as we already discussed. Yes. Let us see. Actually, this was not there initially. Now, service suppliers started protesting against the government, telling, what will we do? We are given only for RTM. That is, manufacturer of any goods other than bad tip and trader of any goods. Only one service, restaurant. What about other service suppliers? Ullas, what about other service suppliers? They were not given any composition scheme. So that is where they protested. Service industry protested against the government, telling, what about us? So that is where they introduced later 10.2A. They also call this as new composition scheme, but it is no more new because it was already added few years back. But when they named it, they told new composition scheme. For whom service suppliers or mixed suppliers. Mixed suppliers means what, sir? Maybe I am supplying goods along with service, but service is not marginal. Service is not marginal. It is a big service. So are you eligible for 10.1? No. So what should you do? Bring both under 10.2A. Goods as well as service, both can I bring it under 10.2A? Yes, provided you are eligible here. So, new composition scheme under section 10.2A. Guys, see, even in income tax, we had for both, no? For business, obviously in business, what do we do? Maybe buy and sell the goods, trader, or maybe I manufacture and sell it. Do we had a presumptive scheme for business? Yes, 44 AD. Or if I'm doing goods carriage business, 44 AE. Agree na? Next for profession, sir, I am rendering services, sir. I am doing a profession. Like I am a practicing chartered accountant, company secretary, lawyer, For me, what, sir? Presumptive scheme under section 44 A, D, A. Correct? Huh? Same way, here also there should be uniformity. You are giving only for the goods supplier something, but not for service supplier. How can it be? So that is where later government also realized their mistake and they introduced the composition scheme for service suppliers. As we have already seen that primarily the composition scheme is available in respect of goods and only one service, namely that is restaurant service. However, a person engaged exclusively in supply of services other than restaurant is not eligible for composition scheme under section 10(1). What will they do, sir? In order to provide benefit to such suppliers, a scheme to pay tax at concessional rate has been formulated primarily for small service providers like saloon stylists, tailors, etc., who are not otherwise eligible for composition scheme under section 10(1). Means simple, this is for a small service suppliers who are not covered under 10(1). Okay. See, I am talking about small service suppliers. Sir, there only you taught something proviso, no, sir, marginal service. Guys, that marginal service was along with RTM. Along with RTM. Sir, RTM is not there, only service. So, that too not restaurant. What will I do? Bring it under 10(2). Okay. This section provides an option. Option again. Both the composition scheme is an option, guys. It is not mandatory. To a registered person whose aggregate turnover in the preceding financial year is up to 50 lakh and who is not eligible to pay tax under composition scheme under section 10(1), 10(2) may opt to pay tax under section 10(2)(a) at what rate? 6%. That is 3% CGST, 3% GST. And guys, with respect to composition supplier, no question of IGST. Why? They cannot supply outside the state. Total rate is 6%, but obviously if I give a breakup, it will always be CGST plus SGST or CGST plus UDGST. On the supplies of goods or services or both up to an aggregate turnover of 50 lakhs made during the current financial year, subject to specified conditions which are primarily the same as the conditions for availing the composition scheme under section 10(1) and 10(2). Condition, restrictions and all is same for both the composition scheme, guys. Who are the persons who is not eligible for section 10(1), 10(2), but eligible for 10(2)(a), who is exclusively engaged in supplying services other than restaurant service, like as I told you, consultancy, auditing, legal services like that, or who is engaged in the supply of services, that is other than restaurant, along with supply of goods and or restaurant service of value exceeding the limit given in the proviso during the financial year. Guys, simple. You're engaged in RTM. You're engaged in RTM plus a service other than restaurant, but this service is not marginal service. It is not a marginal service. What is marginal service? The turnover limit and all we have seen 10% of last year turnover or 5 lakh, whichever is higher. But from this, we have got more turnovers. So in that case, can we call it as marginal service? No. In that case, what should I do, sir? Bring entire business under 10(2)(a), provided my turnover is within 50 lakh. Because if it is more than 50 lakh, then I'm not at all eligible. Sir, for 50 lakh is for all the states or only selected states or all states? Under 10(1), it was 1.5 crore for all the states except 8 states. For 8 states, how much it was? 75 lakh. Whereas here, for all the states, no discrimination, no distinction, nothing. It is always 50 lakh. You can just observe here. I have just made one table here that is in revision book. You can see for 10(1) and 10(2), what is the threshold limit for checking the eligibility? Last year aggregate turnover should be up to 1.5 crore or for special states 75 lakh. Whereas for 10(2)(a), the threshold limit is 50 lakh for all the states. Clear? And please remember the rates, guys. I told you rates under section 9 is not a part of your syllabus, where we need to do the classification of goods or services and then tell what is the rate of goods or rate of services. That is not a part of your syllabus. You need not know the rate as per section 9. But as per section 10, should we know the rates, sir? Yes, please be careful. You should know these rates. Okay, sir. Fine. Coming back. Now, who is not eligible for 10(2)(a)? List is copy paste. Above we saw, na? What did we see above? Who is not eligible for 10(1)? Where was it given? 10(2). Same list of people, guys. Same list of people is not eligible for even 10(2)(a). So that means these people are not eligible for 10-1 also. They are not eligible for 10-2 also. Sorry, 10-2A also. So what should they do? Follow section 9 people. They all should follow section 9, which I call it as normal scheme or normal living, or same to same list. So one place if you study, then the other one becomes easy, guys. The following persons cannot opt for composition scheme under section 10.2a. Where is it given, sir? Section 10.2a. Who is not eligible for 10.2a is given where? In 10.2a. Who is not eligible for 10.1 is given where? In 10.2. Okay. If by chance, if you are not able to remember the subsections, the first choice is always remember. If by chance subsections I am not able to remember at least main section 10. And I suggest 10.1, 10.2 and 10.2a you remember, because two different composition scheme covered in two different sections. 10.1, 10.2 RTM. 10.2a other than RTM. Other than RTM. Okay. Who are those people? A person who is engaged in supply of goods or services which are not leviable to tax under this act outside GST. That is, they are supplying what people? Non-taxable supply, NTS. Next. A person engaged in making interstate outward supplies of goods or services. That is outside the state, you cannot supply. Then a person who is engaged in making supply of services through electronic commerce operator who is required to collect tax at source under section 52. Then a person who is the manufacturer of bad tip. Last one, casual taxable person and non-resident taxable person, guys. Copy paste of the list. Copy paste of the list. But one thing which is not covered here is, I will just show you this one. Because this guy was not eligible for 10.1. But is he covered in 10.2a? Yes. That is, who is providing service other than restaurant, which is not marginal. Which is not marginal. So obviously this point is not covered there, because this guy is not eligible for 10.1. But is he eligible for 10.2a? Yes. Here, this one thing is missing there. Okay, sir. Fine. Now let us go to, we are done with both the composition scheme, guys. Now let us move to conditions and restrictions, which is common for both. This is common for both the composition schemes. What are those? One by one. Guys, for eligibility, we will check which year turnover. For seeing whether I am eligible for composition scheme or not, we will check which year turnover. Last year. Sir, once I am eligible, I came to composition scheme. Now, can I follow it forever? Maybe not. Why so? Because assume in between the year my turnover crossed 1.5 crore. Can I still continue under the composition scheme? No. As soon as my turnover crosses the threshold limit, immediately I have to move to section 9B. Assume on Jan 10th, my turnover crossed 1.5 crore. Immediately on the same day, I cannot even wait till the end of the year. Immediately on the same day, I have to move to section 9 and start paying tax as per section 9 at normal rate. At normal rate. Sir, what if I am covered under section 10.2a? Last year, my turnover was within 50 lakh. I am eligible in the current year. But in the current year, my turnover crossed 50 lakh on 15th December. On 15th December of current previous year. Can I still continue under composition scheme? No. On the same day, you have to move to section 9. Immediately. Clear? For eligibility, we will check last year turnover. To pay tax, we will check current year turnover, right? Quarterly. But in the current year, at any point of time, if my turnover has crossed the threshold limit, immediately I have to move from section 10 to section 9. Okay, let us see. Person opting for composition levy, that is both the schemes, has to comply with the following conditions. First one, the option to pay tax under composition scheme lapses from the day on which his aggregate turnover during the financial year exceeds the specified limit, that is 75 lakh or 1.5 crore or 50 lakh. As per which section? Section 10, subsection 3 puts this condition. For both the schemes, this is common. For example, I will just explain, listen here. Assume on 15th February, my turnover crossed the threshold limit. Whatever is applicable for me, either 1.5 crore, or if I am from special states, 75 lakh, or if I am following 10.2a, then 50 lakh. My turnover crossed the limits on 15th February. Immediately on the same day, should I go to section 9? Yes. Before 15th February, what was my scenario? I was following composition scheme under section 10. I was paying tax on my outward supply at what rate? Composition rate. Can I claim the credit on my inward supply? No, I cannot claim. I had already discussed this story. Correct? Yes, sir. Now, from 15th February, I am taking a new birth. Under which section? 9. So I am moving from 10 to 9. I should pay tax as per what rate? Normal rate. For normal rate, what should I do? Classification. I should check what is the rate applicable for my goods or services. Accordingly, pay at the respective rate. Then is ITC available under section 9? Yes. Once I pay tax on my outward supply at normal rate, I am eligible for ITC, guys. Is that clear? Yes. I have few points to explain. I will take care of it later. So hope you understood. What I try to explain here is once my turnover crosses the threshold limit, that threshold limit might be 75 lakh, 1.5 crore or 50 lakh. Immediately on the same day, please move to section 9. And there is few procedure to be followed. What is that? I will take care later. Okay, sir. Fine. The registered person shall not collect any tax from the recipient on supplies made by him, nor he shall be entitled to any credit of input tax paid on inward supply. I had already covered this, guys. I had already covered all these highlight points. Here. Can this composition supplier collect tax from the recipients? No, he cannot. Now, can he claim ITC? No. Now, as he cannot collect tax from the recipients, by mistake he collected. Now, this recipient can go and claim credit, huh? No, sorry. You cannot. Okay. Next one. The recipient of such supplies can't claim input tax credit. Means you are a person who has purchased from me. I am a composition supplier. You have purchased goods or services from me. Can you claim the credit? No. See, first of all, you are not paid tax only. Why? Because I paid out of my own pocket. You cannot claim credit. Assuming I have collected. By mistake or intentionally, I have collected. Fraud. Okay. Now, can you go and claim credit? No. You cannot. Just because you have paid for me, you cannot claim the credit because you have purchased your inward supply from a composition supplier. Okay, let me read it once again. Third point. The recipient of such supplies can't claim input tax credit on supplies from such suppliers who have opted for composition levy. So simple, if I am a composition supplier, I am the break point for credit. I am the break point for credit. Why so? For my inward supply, I cannot claim credit. For my outward supply, I cannot pass on the credit to my recipients. So I am the break point. Break point of what? The ITC chain. Fourth one. The supplier who opts for composition levy cannot issue tax invoice because they cannot collect tax from the recipients. No, because in tax invoice, guys, tax breakup will be given. You would have observed whenever you received any bill, how do I call it as tax invoices? Assume they would have mentioned value of goods or services. Then they would have told add CGST at 9%, SGST at 9%, the total amount. Correct? Yes. They have given a breakup of how much is tax. That is called tax invoice. Now, can composition supplier issue tax invoice to the recipients? No. Why? He cannot collect tax from his recipients. So what document should he issue? Bill of supply. Therefore, they need not collect any tax on supply. They have to issue what document to the recipient? Bill of supply. Guys, all these are important. They may ask descriptive question or MCQ question. Please be careful on all this. Next, for inward supply of goods or services, if RCM is applicable, he shall pay the tax under what? Reverse charge at normal rate. On my inward supply, can I pay tax at composition rates? No. If RCM is applicable, I should pay tax at what rate? Normal rate. Okay. I have an illustration here. I will just cover that first. Mr. A retailer, presents the following information for the year. Purchase of goods 30 lakh, out of which goods worth 2 lakh is taxable under RCM. So on 28 lakh, supplier will pay tax. Whereas on 2 lakh, who should pay tax? Me as a recipient. Under what? RCM. Sale of goods. Okay, my outward supply now. 49 lakh. He has opted for composition scheme. Show the treatment in GST. Assuming that rate under GST are 0.5%, 0.5%. That is composition scheme on my outward supply. Whereas 9%, 9% under regular scheme. Regular scheme is nothing but section 9 people. Regular scheme or normal scheme. Now, how much tax should I pay people? On my outward supply, 49 lakh is the turnover. On that 0.5, 0.5. How much CGST and SGST? 24,500 each. Then coming to inward supply. Tax payable on reverse charge is how much, people? 2 lakh into 99. Why 9? It is inward supply. Normal rate is applicable or composition rate? Normal rate. So 18,000 each. Hope you got it. On inward supply, it is always normal rate. So composition rates are applicable only on outward supply. I had also given it in my chart, which you already made a note of. You can see on inward supply, we need to pay tax at what rate, people? Normal rate. Yes. See, on the exam days and all, if you have understood thoroughly now, okay, if you just go through this also, it would be sufficient because everything is covered just as a point. Just as a point here. Yes. Chalo. Next, it cannot be engaged in the manufacture of bag tip gas. You cannot manufacture bag tip. Now, sir, on 15th February, I started manufacturing bricks, sir, or blocks, sir. Okay, good, very good. Please move to section 9. Please move to section 9. Sir, last year I was not manufacturing. That is why we entered you. We allowed you to enter. But now in between the year, you started manufacturing bag tip. Immediately I have to move to section 9. Only for my bricks business or entire business? Entire business. Entire business, guys. Okay, 7th one. He shall mention the words composition taxable person not eligible to collect tax on supplies at the top of the bill of supply issued by him. Means whenever I am issuing a bill of supply, on the top I should have mentioned, for example, Vikas Limited composition supplier. I should disclose that I am registered under composition scheme. You should know when you are buying goods with me, you should know that I am a composition supplier and it is my duty to disclose it. He shall mention the words composition taxable person on every notice or signboard displayed at the prominent place at his principal place of business and at every additional place or places of business. So wherever I am doing the business in all my branches, I have to disclose that I am a composition supplier. I am a composition supplier. Why so? Guys, this is for the safety of recipients. Why so? Assume I am registered under composition scheme. Can I collect tax from you? No. Can I pass on the credit to you? No. Now, when you are dealing with me, before you enter into a contract with me, before you do purchases from me, you should know that I am a composition supplier. Why, sir? What if by mistake I collect tax from you? Your papa Amayaka, Amayaki. Okay, you didn't know what is this. I collected tax from you. So it is a mistake from my end, right? Yes. Now you should be aware that if I have displayed in my business place that I am a composition supplier, you should know that you should not pay tax for me. You should not pay tax for me. So whenever you go to any business place, you just observe, have they displayed composition scheme or composition supplier? If yes, make sure that in whatever bill they give, GST is not charged for you. Very important, because some people even though legally it is not allowed, some people think anyway people will not understand, common people, laymen, how will they know taxation knowledge? Okay, and they will start charging it. Clear? So you have to be very careful. If at all, if they are a composition supplier, they have to mention somewhere in their place of business along with on their bill of supply. When they have mentioned that, can they charge GST to the customer? No. And literally I have observed, even in few places in restaurants, okay, that to high class restaurants, they charge service fee to the customers. They cannot. Whenever you have gone to any restaurant, you please observe the bill. You take the role of that responsible citizen in your family. Okay, you observe the bill. If they charge service charge, it is not mandatory to be charged in the bill. It is a tips which I can give voluntarily, but they cannot make me to pay mandatory. Many restaurants, they will tell, wherever I go, first thing, once they give the bill, I will observe that. If they have charged bill, service charge, then chartered accountant inside me will come out. Okay, ಈಗೆಲ್ಲ ಮನೆ ಎಲ್ಲರೂ ನಾನು ಯಾರ ಜೊತೆ ಹೋಗಿದ್ದೀನಿ ಅವ್ರಿಗೆಲ್ಲ ತೋರಿಸ್ಬೇಕಲ್ಲ. I will call the person. How can you charge this? They will tell, sir, for staff, that to this. Some reasons they will give. Sir, okay. If it is a tips, I will give it by my own. It is not mandatory. Please remove it from the bill. Means they will remove and get it. They will remove and bring the new bill. Please do that, because it might be 100, 200, 1,500, whatever. Money is money. Save it. Shalom. Notes. Registration under GST law is compulsory for opting for composition scheme. Sir, I'm starting my business today. Straight away, I want to follow section 10. Can I do it? Yes. In my registration application itself, I can choose. When I'm making an application, there will be an option there. Do you want to opt for composition scheme? I can select. But if I want to follow section 10, is registration mandatory, sir? Yes. Irrespective of my turnover, I have to get registered. I have to get registered. Whereas for others and all, only if your turnover crosses 20 lakh, 40 lakh, or for some special states, it is 10 lakh. Only if your turnover crosses these limits, you have to get registered under GST. Whereas for composition supplier, irrespective of your turnover, if you want to follow section 10, please get registration. B. The composition scheme, if opted, is applicable under one PAN, and then it is applicable for all the businesses or stays under one PAN or none. I had already told you. Now, sir, I have branches in 5 different states. For 3 states, I want to follow section 10. For 2 states, I want to follow section 9. Is it possible? No. You have to follow composition scheme for all 5 branches. Is it clear? Or else, if you want to move, take all 5 registration to section 9. Or else, sir, I have 2 business. One business I want to keep it under section 10. One business I want to keep it under 9. Is it possible? No, sorry, you cannot. Or else I have 2 goods. I am supplying 2 goods. For one goods I want to follow section 10. For another goods I want to follow section 9. Is it allowed? No. Both has to be either under 10 or both has to be under section 9, guys. 9 or 10, both. So I had told one simple sentence, all in or all out. Ashte. This implies that it is not allowed for some businesses under normal levy. Normal levy means 9, and some under composition levy. If you want, you just write, guys. You should not get confused later. Normal levy means which section? Section 9. Composition levy means 10. If one such registered person opts for normal scheme, other becomes ineligible for composition scheme. Guys, now assume, sir, for one of the business I want to follow 9. Take all your business. Or else one of my business, one of my goods is ineligible for section 10. Sir, I started manufacturing ice cream, sir. I started manufacturing ice cream. Is it eligible for composition scheme? No. Sir, along with ice cream, I manufacture many other products. So for ice cream, can I follow 9? And for other products, can I follow 10? No. Take everything under 9. Okay. Coming to advantages and disadvantages, you can expect a theory questions like this. What is the advantages and disadvantages of composition scheme, guys? Yeah, let me read one by one. Advantages first. No classification of goods or services are required. So if I am following section 10, should I classify under heading or chapter or subheading and all? No, not required. Straight away, you go and pay tax at the composition rates. Next one. Single GST rate is applicable on all the supplies made. If I am a manufacturer of any goods other than bag tip, what is the rate? 1%. Sir, I am trader of 10 goods. For all 10 goods, what is the rate? 1%. Restaurant, 5%. Sir, I am providing any service other than restaurant, 10 to A. What is the rate? 6%. Any service, 6%. You need not even bother about, sir, what is the classification? Which category? Which heading go? Which subheading go? No, don't worry. Next, no requirement to raise tax invoice. I need not give tax invoice to my recipients. Payment of tax is done when, guys? Quarterly. And file a payment statement in GST CMP 08. We call this as payment statement. Okay, I need to pay tax quarterly, April, May, June. Pay it in July. Okay, there is some deadline and all for that. That is not a part of your syllabus. What is the due date and all? You need not worry. Yeah. So I need to pay quarterly GST if I am registered under composition scheme. For April, May, June, I will pay it in July. Okay, sir. And also file a payment statement in CMP 08, giving a proof of what payment I have made. Then return has to be filed annually. There are 2 annual return, GSTR 4 and GSTR 9A. Sir, what if I am under section 9? You have to file every month. You have to pay tax every month. Every month you have to file 2 returns, 1 and 3B. GSTR 1 and GSTR 3B. Okay, that is for 9 I am talking about, not 10. Okay, then coming to disadvantages. Obviously, everything will have its own advantage and disadvantage. So even composition supplier will have some limitations. What are those, sir? Composition dealer cannot avail the benefit of ITC, one of the major disadvantage paid on inward supply. So guys, it is all about tax planning. Okay. So for example, I am confused. Should I follow composition scheme or not? Check how much might be your maximum input tax and how much will be your output tax. Go with whichever benefits you. For example, sir, my input inward supply, most of the inward supply which I purchase is from small supplier with not registered under GST. That means I may not pay input tax. Correct? So what is better for me to follow for outward supply? Composition scheme. So that I can charge less for my customers and attract more and more customers in my initial stage of business. Correct? Actually, indirectly, by introducing this, government is supporting small businesses. How? I already explained that math. 118, 101, 105 and all. Yes. Because guys, if I want to start selling a product, I have to price it lower. Or else how will I attract the customer? Clear. So I have to price my products as low as possible when compared to the competitor so that I get some at least market share. So that is why. So in that case, what is better for me? Composition scheme. No, sir. Actually, on my inward supply, I pay huge taxes. Whatever I purchase is from registered suppliers. Then I am paying lot of input tax. Better don't follow composition scheme. Why so? Because even if you are paying a tax at 18% or even 5% on your outward supply, then you will get a credit, no? You will get a credit of your inward supply. So if you want to claim a credit where you have paid huge input tax, better follow section 9. Okay, because just because there is composition scheme, it is not mandatory for you to go and follow it. Please analyze and then decide. Okay, but compliance burden obviously under composition scheme is less, guys. Next, he cannot charge tax to the recipient. That is one of the disadvantage on outward supply. Then a limited territory of business. Why so? Because he cannot supply the goods or services outside the state. So he has only limited territory that is within the state. Oh, last part, guys. Okay. So we'll come to this actually later. First, let me finish the procedure. Explanation I will teach later. First, let us finish the procedure, guys. Procedure. Sir, what is the procedure if I want to follow composition scheme? Guys, there are two scenarios. Listen here. There are two scenarios. Sir, now I am getting registered for the first time under GST. Can I straight away get registered under section 10? Yes. Guys, when I am applying for registration, I need to file an application for registration in GST REG01. GST REG01. It is a registration application. In that itself, I can choose composition scheme. Then once the registration is granted, I am straight away whom? Composition supplier. Next scenario. I am already registered under section 9, but I felt, oh, yo, too high rate. Okay, I am not able to pay every month. Oh, yo, not possible. My customers are also not supporting. They are telling, oh, yo, 18%. Oh, yo, why should I pay? So I thought, let me switch to section 10. Can I? Yes. Can I move from 9 to 10? Yes, but only from the beginning of the year, not in between the year. Not in between the year. So from 9 to 10, I can move only from 1st April. If I already started with 9, continue till the end of the year. From the beginning of next year, you can go to 10, provided you are eligible. Provided you are eligible. For that, you need to file a separate application called CMP02. CMP02. Okay, let us see that. Any person who is not registered and applies for registration may give an option to pay tax under composition levy in Part B of registration form. That is form GST REG 01. So REG stands for registration, guys. In any chapter, whenever we see form number, that short form stands for the topic which we are covering in that chapter. Okay, actually REG comes under registration topic, but still I am covering it here because it is a part of this concept also. That is composition. Okay. So when I am making an application for registration in REG 01, there will be a part B where they will ask, do you want to follow composition scheme? If yes, choose yes. Choose yes. Such intimation shall be considered only after the grant of registration to the applicant, and his option to pay tax under composition levy shall be effective from the date from which registration is effective as per rule 10. So from what day I will be called as composition supplier is from the day my registration is effective. Sir, from what day my registration will be effective is given in rule 10, guys, which is a part of registration chapter. I will cover it in registration chapter. Okay. Then, what if I are already registered? I am under section 9. Now, can I move to 10? Yes. A registered person under normal scheme, that is section 9, who want to opt to pay tax under composition levy scheme shall electronically file an intimation in form GST CMP 02. CMP stands for what? Composition. CMP stands for composition. Pan India and not state wise. That means you have to follow it for all your branches on the common portal, that is www.gst.gov.in. That is called GST portal. Prior to the commencement of financial year for which a said option is exercised, the option to pay tax under section 10 shall be effective from the beginning of financial year, always from 1st April. Always from 1st April. But before 1st April, you have to file an intimation, that is in CMP 02. For example, sir, can I file this intimation in May telling I will follow composition scheme from April? No, they will tell you can come next year. Correct? Because this year has already started. Clear? So before the financial year starts, we need to file this intimation. Sir, why not GST REG 01, sir? In the first option you told GST REG 01. Here you are telling CMP 02. Guys, if you are already a registered person, you would have already filed this. You already filed this. And at that time, you didn't choose it. You told, I don't want composition scheme. Clear? So registration is granted under section 9. You are following it. But now you felt 10 is better. So, can you opt 10 now? Yes. Through what? CMP 02. Not REG 01. CMP 02. Okay, sir. Then, a registered person paying tax under section 10 may not file a fresh intimation every year, and he may continue to pay tax under the said section, subject to the provisions of Act and rules. Sir, this year I am following composition scheme. Every year, should I tell the department that I will continue under composition? I will continue under composition? Not required. But you can continue under composition scheme provided you are satisfied all the conditions given. If you violate any condition, if your turnover crosses the threshold limit, please immediately move to section 9. Section 9. Hope you understood. Every year intimation is not required. At the time you are going to 10, you just intimate, enough. Sir, what if I am going out from 10 to 9? Should I intimate? Yes, I have to intimate. If I am continuing under 10, no problem. But if I am going out, I should intimate. Okay, let us see. Validity of composition levy. Sir, can I follow this composition scheme forever? Yes, they didn't tell only 1 year, 2 year, 5 year and all. I can follow it forever, provided I satisfy all the conditions and my turnover is within 1.5 crore or 75 lakh or 50 lakh. Sir, what if I cross it? Immediately, please move out. Immediately, please move out. The option exercised by a registered person to pay tax under composition levy shall remain valid so long as he satisfy all the conditions mentioned in the said section and rules. We have seen already conditions and restriction, which is same for both the schemes. But please be careful. Turnover limit is different. Okay, but conditions and restrictions are same. The option to pay tax under composition scheme lapses from the day on which is aggregate turnover, that is during the financial year, exceeds specified limit. That is 75 lakh or 1.5 crore for 10-1 scheme, or else 50 lakh for 10-2A scheme. Example, a person availing the composition scheme during the financial year crosses the turnover of 1.5 crore on which day? 9th December. The option availed shall lapse from the day on which his aggregate turnover during the financial year exceeds 1.5 crore. That is on 9th December in this case. Means on 9th December, he will become ineligible for composition scheme. Immediately, he should move to section 9, guys. 9. Clear? I will just explain that procedure here. Please pay attention. I have made one chart for it. Listen, people. Now, on 15th February, my turnover crossed threshold limit. That is either 1.5 crore or in case of special states, 75 lakh or for 10-2A, 50 lakh. So, I became ineligible? Yes. So, immediately I have to move to section 9. Okay. Now, is there any procedure I need to follow? Yes. Whatever I have given in blue color, guys. This is the procedure I need to follow. when I became ineligible for section 10. What is it? File an intimation for withdrawal from the scheme in form GST CMP04 within 7 days. So within 7 days from 15th February, I need to tell, sir, I became ineligible. I am moving out. I am moving out to section 9. I have to intimate whom? Not for his spouse, for the department. Chala, sir, every day I will intimate my wife, I am going home, I am coming home, anta. Not that. So, should he inform? See, whether he inform it for family members or not, that is secondary. Please inform it to the department within 7 days. Okay. Also, listen. He has to provide the details of stock, whatever he is having on 14th February, special day. Why is the special day? Before preceding day. ಅದು ಅಷ್ಟೇ ಬೇರೆ ಎಲ್ಲೂ ಹೋಗಬೇಡಿ. 15th February I became ineligible. On preceding day, what is the preceding day? 14th February. Whatever stock I have to give the details of that in ITC 01. Within how many days? 30 days. Within 30 days. Why I will tell you. Please listen now. Please listen. Before 15th February, I was under which section? 10. So I was paying tax on my outward supply at what rate? Composition rate. So can I claim input tax credit on my inward supply? No, I cannot. So any purchases made before this, no credit. No credit. But from 15th February, where am I? Section 9. So I should pay tax on my outward supply at what rate? Normal rate. Can I claim ITC on my inward supply? Yes, I can claim. Now listen, guys. Now listen. See, if I purchase anything after this, credit is available. If I had purchased anything before this, credit is not available. But I have a stock on 14th February. I have a stock on 14th February. When did I purchase this? Before 14th February or on 14th February? Correct? Yes. But when will I use it? When will I use it? On or after 15th February? Correct? Because you have a closing stock as on 14th February, which you have purchased before 14th February. But when will you use it? Or when will you sell it, people? On or after 15th February. Correct? So on or after 15th February, you are under which scheme? Normal scheme. Paying tax at normal rate. So is it fair for the assessee or the supplier to give credit on that also? Yes. Because I would have purchased it before 15th February. But I will use it on or after 15th February. Very beautifully framed. Correct. Because it's fair enough to give credit for that. Because they told for this no credit. Okay. But I didn't use it. When I was under section 10, I didn't use it. When am I using it? When I came to section 9. I'm paying tax at normal rate, boss. Give credit for me. Yes, take it. Provide stock details of RM stands for raw material, WIP, work in progress, finished goods, and capital goods. As on what day? 14th February. That is immediately preceding day. Within 30 days. 30 days. Within 30 days from 15th February, you have to give the details in ITC 01. ITC means Indian Tobacco Company. No. Input tax credit. 01. And this provision, whatever I have mentioned here, is a part of section 18, which I will cover again in input tax chapter. In input tax credit chapter. Guys, see, whatever is connected, I will try to cover it together so that you will have an overall idea. But still in detail, I will again explain when I go to section 18. Did you guys get it? Gurumurthy, listen clearly. Keltaya? Listen. Assume I have purchased raw material before 15th February, Gurumurthy. When will I use it in the manufacture? After 15th February. When will I sell these finished goods? After 15th February. Should I pay tax at normal rate or composition rate? Normal rate. So they should give credit on this, no, Gurumurthy? Correct. Chalo. Next, dip this day. Listening? WAP. I purchased raw material, started manufacturing, but not completed. As on 15th February, I was busy 14th. I couldn't complete. So manufacturing is not complete. Yake anta don't ask. Busy ashte. Chalo. So I couldn't complete the manufacturing. When will I complete? Diptishri? On or after 15th? 15th agalvala. Inna aa moodal irtivala. So chalo. On or after 15th. Correct. So when will I complete this and sell? On or after 15th. So on this way, I will pay tax at composition rate or normal rate? Normal rate. So should I get credit on this? Yes. Last one. Finished goods. Girish. I have produced output, but I couldn't sell it as on 14th February. Why? All customers busy celebration. They are not ready to buy my product. Not my product is not a rose, not a gift. Okay, now, chalo. Now, product was ready, but I couldn't sell it. Product was ready, but I couldn't sell it. When will I sell this, Girish? On or after 15th February. Should I pay tax at composition rate or normal rate? Normal rate. Should they give me credit? Yes. Credit is given. Credit is given. And even that last one is capital goods, which is nothing but fixed asset. Now I had purchased a fixed asset. Nikhil, I had purchased a fixed asset before. Capital goods is nothing but fixed asset. I had purchased fixed asset before 14th February. Now on 15th, I am going to section 9. Will I throw this asset? Will I throw or will I continue to use it? I will continue to use it. Should they give the credit on it? Yes. But they are not giving full credit. They will reduce you something. Why so? Because I have already used for few months before 14th February. To that extent, they will reduce the credit. Remaining, they will give. How much they will reduce? We will learn it in section 18. Guys. Fair enough. Guys, understand with the logic, you can easily remember. If you think, 30 days, ITC 1, give the details of what? That, this. Don't remember like that. Remember logically, conceptually, it will stay in your mind. It will be retained in your mind. Okay, you can observe here. Once I come under section 9, what and all should I do? Can I collect the tax from the recipient? Yes, I can collect. Can I issue tax invoice to my recipient? Yes, I can. Can I make interstate outward supply? Yes, I can make. Then I should pay GST. All first three is advantage. Now disadvantages. Pay GST when? Monthly. File returns when? Monthly. Or some returns are quarterlies. Okay. Then can I claim ITC on my inward supply? Yes, this is an advantage. Actually, last one is an advantage. Yes, guys. So coming back. Coming back to the provisions. See, once I become ineligible, if I myself go out, very decent, obedient fellow. Sir, I violated the conditions given under section 10, but still I have not gone out. What they will do? What they will do? Neck is strong. Hope you understood. They will hold your neck throughout. But they will first send a notice to you, ask you to explain why do you want to continue under section 10. I have observed that department will send a notice telling, see, we observed that you have violated this condition, but still continuing under section 10. Tell me, why should I allow you to continue under section 10? Opportunity of being heard should be given. So now the supplier will tell, sir, this is what my reason is under. If reason is satisfied, they will allow him to continue under section 10. If not, they will tell, please go out of 10 and follow 9. Such person is required to pay normal tax under section 9.1. 9.1 means normal scheme. From the day he ceases to satisfy any of the conditions prescribed for the composition levy, he shall issue tax invoice for every taxable supply made thereunder, and he shall also file an intimation for withdrawal from the scheme in form GST CMP 04 within 7 days of occurrence of such event. That is, once you become ineligible. What is the date of ineligibility in my example? 15th February. Within 7 days, I have to file an intimation telling, sir, so and so reason, because of so and so reason, I am going out. Clear? And I have to file that intimation in CMP 04 within 7 days. And I have told you one example. That is, my turnover crossed the threshold limit on 15th February. It need not be always that. For example, assume on 15th February, I started manufacturing pan masala. Did I become ineligible? Yes. Immediately, should I go to section 9? Yes. Guys, any non-violation I have done. For example, one more. Okay, let me give one more. Assume on 15th February. On 15th February, in full Josh, I sold one goods outside the state. I sold, okay, some important person was there outside the state. I sold the goods to him or to her outside the state. Did I become ineligible? Yes. Sir, one exception. Sorry. You have to go out. You have to go out. Okay. Next point. The registered person who intends to withdraw from the composition scheme shall, before the date of such withdrawal, file an application in prescribed form. That is the intimation. Okay. So, means, sir, can he file within that date, or you can also file it within 7 days from the occurrence of the event. Next, he should also give the stock details, guys. However, such person shall be allowed to avail the input tax credit in respect of the stock of inputs and inputs contained in semi-finished or finished goods held in stock by him and on capital goods held by him on the date of withdrawal and furnish a statement in form GST ITC 01. ITC stands for input tax credit. Within 30 days of withdrawal of the option or from the date of order passed in the prescribed form, as the case may be, containing the details of such stock held. So within 30 days of 15th February, I need to give the stock details as on what day? 14th February. Not on 15th, as on the preceding day. So whatever is the closing stock of my inventory as on 14th February, I need to give the details of that. Why so? Because they will give me a credit. They will give me the credit. What details should I give, sir? I should tell them when did I purchase this, how much tax I have paid on it, and have I already used it or yet to be used. All these details I need to give it. Oh, this is when I myself follow the law. If I am not doing it, then they will make me to follow it. Where the proper officer, guys, in GST they use the word proper officer. Who is proper officer? GST officer. Clear? In income tax we use the word assessing officer. Who was it? Income tax officer. Same way in GST they use proper officer. Who is it, sir? GST officer. Sir, is there anyone called improper officer? No. Only proper. So that proper officer means GST officer. Correct, Avedesh? Huh. Where the proper officer has reasons to believe that the registered person was not eligible to pay tax under section 10 or has contravened the provisions of the act or provisions of this chapter, he may issue a notice to such person to show cause. To show cause means what? I am issuing a notice for you, not just to see and keep it. You have to reply for it. Show cause means I am issuing a notice with a intention of receiving reply from you. Within 15 days of receipt of such notice as to why option to pay tax under section 10 shall not be denied. Now, if proper officer observed that you are paying tax under section 10, even though you are not eligible, they will send you a notice telling, why should I allow you to pay tax under section 10? Tell me. So you should explain. If you have any genuine reason, you will explain it. Just because you have explained, is it an obligation for the proper officer to accept it? No. If they feel satisfied, they will accept it. If not, they will tell, sir, please move. Please move to where? Section 9. Upon receipt of the reply to the show cause notice issued from the registered person, the proper officer shall issue an order in the prescribed form within a period of 30 days of receipt of such reply, either accepting the reply or denying the option to pay tax under section 10. Guys, once the proper officer issue the notice to you, you have how many days to reply? You have how many days to reply? 15 days. And once you reply, they will have how much days to either accept it or reject it? 30 days. Within 30 days, they can either accept it and allow you to continue under section 10, or else they will reject and pass a order telling, get lost from section 10. Go to section 9. If a taxable person has paid tax under the composition scheme, though he was not eligible for scheme, the person would be liable to pay penalty and the provisions of section 73, 74, 74A, which are like recovery sections, guys, of CGST Act shall be applicable for determination of tax and penalty as per section. This provision is given under which section? 10 subsection 5. What they are telling is, on 15th February, assume I became ineligible for composition scheme, but still I continued to pay tax under composition scheme. Now they will calculate from 15th February till the day you actually continued to pay tax under section 10. How much is the different tax? Difference tax means I would have paid only 1%. But as per normal rate, it is 5%. What is the difference? 4%. They will ask me to pay this along with penalties. Along with penalty. And do they have the right to recover it from me even if I am not paying it? Yes, that is what there. Section 73, 74 and all will give a right for the proper officer to recover the amount whatever I am supposed to pay to the department. They will have a right to recover it. Section 73, 74, 74A is mentioned here, but that is not a part of your syllabus, guys. It is not a part of your syllabus. Okay, done with all this. So, See, this part, you can just make a note of it. What is important now for you is this two part. This actually I have already covered, for which you can just write, mention the above table or chart. Which chart, sir? I will just show you. Whatever I had covered here now, people, same points I had given them. Here it was only one table, but now I have covered both 10 as well as 9. For the 10 part, same points. Same points. So you need not write it again. If you want, if you can write it, but maybe as a homework. So just leave space for it or just write, refer the above table. Clear? Whereas this two you better take. Okay, this will give you overall picture. When I am become ineligible for section 10, should I move out immediately? Yes, guys, please listen. One clarity, please listen. Listen. Shh. On 15th February, I became ineligible for composition scheme. When should I go to section 9? Immediately, same day. Now, sir, I was under section 9, so I want to move to section 10. I felt like moving on 15th February. Can I move? No. I can move it only from 1st April of next year. 1st April of next financial year. Hope you understood. Maybe 1st April 26. Is that clear? If this is 26, then I have to wait for few months and then move to a composition scheme. So simple. If you want to move from 9 to 10, it is always from the beginning of financial year. Whereas if I violate any provisions given under section 10, immediately go out. Immediately go out. Guys, got it now? Here I have written on 15th February, I became ineligible. I became ineligible for what reason? Whatever conditions they have given, I have violated one of it. Maybe my turnover is more than threshold limit, or I started supplying outside the state, or I started manufacturing bag tip, anything like that. I have violated one of the condition. Yes, make a note. Yes, we are done with this provision. Now we have an explanation to cover. Explanation to section 10. Come back to that, which I had kept pending. Yeah, guys, listen. We have seen the aggregate turnover definition given in section 2, clause 6. What and all it includes? What and all it includes? Taxable outward supply plus exempt supply plus exports plus interstate supplies between a person having a same PAN to be computed on all India basis except GST and cess. Correct? Huh? Yes. This is the aggregate turnover given in section 2, clause 6. I had also given one example for it, which you already made a note of. This is not only for section 10, it is for the entire act, guys. Now, for section 10 purpose, they have given two explanation telling, please exclude some special items. Please exclude means aggregate turnover should not include something. What is that something is given in explanation, people. So what is it? We will see. Please be careful. What explanation I am reading is only relevant for section 10 because we will use aggregate turnover terms in other topics also. Is this explanation applicable there? No. Until and unless told, not applicable. If they are telling it is applicable, then we will see. If not, guys, whenever you use the word aggregate turnover means what? As per section 2, clause 6. Remember it, very important definition. Especially even in registration chapter, that plays a major role. Why so? Because should I take registration or not depends on my aggregate turnover. Okay. Chalo, we will see that. As per explanation 1 to section 10, while computing the aggregate turnover in order to determine eligibility. Guys, to determine eligibility, we will check which year turnover? Last financial year of a registered person to pay tax under any of the composition scheme. The value of supply of exempt services by way of extending deposits, loans or advances insofar as the consideration is represented by way of interest or discount shall not be taken into account. That means it will be excluded. It will be excluded. Guys, what is this? Actually, this is a part of exempt list. See, there are number of services which are exempt under GST. but they have taken only one service here, which in short I call it as financial service. Sir, what is it? Simple. Assume I am giving loan. Sania, what am I giving? Loan. In return, what do I charge? Interest. I am giving loan. In return, I am charging you interest. Interest is an income for me? Yes. But should I pay GST on it? No. See, assume I have given 10 lakh loan. You will pay me 11 lakh. 10 lakh is repayment, not at all my income. I am talking about what? 1 lakh. You paid me extra in the name of interest. Is it an income? Yes. But should I pay GST on it? No. GST is exempt on it. Same way. Whenever I give advance for which I am recharging you interest, on that interest, no GST guys, because it is exempt. Part of exemption list. Okay, sir. Now, sir, what about the discount? They have told discount is charged. What is the discount charge? Discounting of bills, bills of exchange. Experts, accounts people. Bills of exchange. Sir, I had a bill of 1 lakh rupees face value. It had a term of 3 months. But ನನಗೆ urgent. I cannot wait till 3 months. So I want to encash it immediately. So can I go to the banker and tell, sir, discount this bill? Yes, I can encash it. But will he pay 1 lakh to me today? No, no. So this has a maturity period of 3 months. So he has to wait for 3 months to collect the payment, right? Yes. So he will pay me, assume, immediately 90,000. He will pay me because, okay, give the bill. Whose face value is 1 lakh? Take 90,000. He will wait for 3 months, encash the bill. For how much? Honor the bill for how much? 1 lakh. So what is this earning now? 10,000. What is that called as? Discount. Discount. So his earning is 10,000. That is banker. Should he pay GST on it? No, guys. It is exempt. Hope you understood. So your interest or discount earned in the course of financial business is exempt. Now, if supplier is supplying this, should it be counted in aggregate turnover? No, guys. It should not be counted in aggregate turnover. And please be careful, guys. There are number of exempt supply. We will see. Very big list is there. Next chapter is that only. Okay. So, there are number of services which are exempt under GST. But what are they asking you to exclude is only one service, not all the exempt services. Only one. So only one has to be excluded. So in simple, guys, while checking the eligibility for composition scheme, we will see the last year turnover. But last year turnover should not include all the things copy paste of 2.6. This is as same as 2.6. But one additional item here. What is it? Last item. I will just read this. This is anyway same to same as given in 2.6. Okay, now. Okay, let me read it fully. Why to confuse you? Value of all outward supply, whether it is taxable, exempt, export or interstate. Take everything. Of person having same PAN will be calculated on what basis? All India basis. All these are inclusive, huh? Yes. What is excluded, sir? CGST, SGST, UTGST or IGST, cess, anything charged under GST should not be included. Next, value of inward supply on which tax is payable under reverse charge. Copy paste of what? 2.6 definition. But one extra thing, last one. Value of exempt supply of services provided by way of extending deposits, loans or advances insofar as the consideration is represented by way of interest or discount. In short, I call it as financial service. Okay, in the law, they have not used this word financial service. I am just calling it as, because whenever we are using it repeatedly, instead of explaining the complete sentence, I will use it as financial service. But please be careful, guys. See, whatever shortcuts I give for classroom purpose, please limit it only for your preparation. Don't use them in your answers in the exam hall, including back tipo, PhD man and all. This is our Rath and all is given only for you are remembering it in a easier way. Okay, chalo. So I have given an illustration to better understand it here itself. What is it? Determine aggregate turnover of a person to check eligibility under composition scheme for financial year 25-26. So we are in the which year? Financial year 25-26. To check whether I am eligible or not, which year turnover should we check? Last year. They are given some data. So this is last year data. We are checking for current year people, but I am going and seeing which year turnover? Last year. Taxable outward supply in the state. Should I take it? Yes. Should I take it, people? Come on. Yes. Next, exempt supplies. There are two categories of exempt supply. Financial service, 20 lakh items. Other exempt supply, 40 lakh items. So what should I take? Only other exempt supply. Other Exempt supply. What are those, sir? Other means what, sir? There are number of services, guys. Clear? Which we will take care in the next chapter. Only financial service we need to exclude. Then inward supply should I count? No. Inward supply will not come. So what is the aggregate turnover now? 80 lakh plus 40 lakh, which comes to 1 crore 20 lakh as. 1 crore 20 lakh. Only two figures I took. 80, that is this one, plus 40. 120. 1 crore 20 lakh. What was the turnover, Varsha, in the last year? What was the turnover in the last year? 1 crore 20 lakh. Is he or she eligible for composition scheme in the current year? Yes, they are eligible. Assuming 1.5 crore. I have told you if state name is not mentioned and all, consider 1.5 crore. Are they eligible? Yes. Sir, what if he or she is from special states? 75 lakh. Then they are not eligible. Then they are not eligible. Obviously, the limit applicable is what? 75 lakh. Have they crossed it? Yes. No composition scheme. Is that clear? So what I made you understand is this one, this 20 lakh, we should not take. Please be careful. This is only as per explanation 1 to section 10, which talks about calculating the aggregate turnover for what purpose? Eligibility. To check the eligibility. We have one more explanation. What is that one more explanation? Further, second explanation. Explanation 2 to section 10 clarifies that for the purpose of determining tax payable. When will I pay tax? When will I pay tax? Current year. On which year turnover? Current year. So while counting the current year turnover, what I should include, what I should not include. Determining the tax payable by a person under this section, the expression turnover in the state or turnover in the union territory shall not include the value of the following supplies, namely. So it should not include two things, people. What are those two things? This one is same to same, copy paste. Exempt supply, BB. Whereas A, guys, see, A is talking about the threshold limit applicable for registration. When should I get registered under GST is told in section 22 and 24. In 22, they have told if your turnover crosses certain limits, you have to get registered. What are those certain limits? 10 lakh for some special states, 20 lakh for goods, 20 lakh for services, 40 lakh for goods supplying within the state. So in simple, when what you don't remember, just remember the threshold limit for registration is 10 lakh, 20 lakh or 40 lakh. Now assume for me 40 lakh is applicable. 40 lakh is applicable. So when should I get registered under GST? If my turnover crosses 40 lakh. But if I want to follow composition scheme from day one itself, I have to register. I have to register. But they told, don't pay tax up to 40 lakh. Don't pay tax up to 40 lakh. Assume my turnover is 50 lakh. I should pay tax only on 10 lakh. This is for every year, huh? No, first year. Only for first year. So simple. Up to the turnover limit applicable for registration, I need not pay tax. I need not pay tax. Why? Because simple logic. See, if I am under section 9, I should get registered only when my turnover crosses 40 lakh. I will start paying tax from 0 or 41 lakh. From 41 lakh. Assume my turnover is 42 lakh. I should pay GST only on 2 lakh. But if I am following section 10, from day 1 only I should get registered. Irrespective of my turnover, I have to obtain registration. Now, is it fair for me if you ask to pay tax from 0? Clear. So that is why they told whatever is the turnover limit applicable for your registration, don't pay tax on it. Over and above that, whatever is there, please pay. Please pay it. Okay. Chalo. What should we exclude? Shall not include. Please underline that. You may think it in vice versa also. It should not include. Anyway, I have given the table below, but still, it should not include. Turnover should not include supplies from the first day of April of financial year up to the date when such person becomes liable for registration under this act. If you want, just write there. Threshold limit for registration. Threshold limit for registration. Lavanya, can you write? Threshold limit for registration. I repeat here at this point. Threshold limit for registration. Okay. Next one is like whatever we saw in explanation 1. Exempt supply of services provided by way of extending deposit, loans or advances insofar as the consideration is represented by way of interest or discount. Okay. Guys, this explanation 2 We are applying for which turnover, people? Last year turnover or current year turnover? Current year. Why are we calculating this? To pay tax. To pay tax. Please be careful, because later you might get confused. Sir, why 2 explanation? Why 2 things is given? The above one was to check eligibility. That is, we need to count it for which year? Last year. Whereas this is for current year, to pay tax. While determining the tax payable by the composition person under section 10 for the current financial year, inclusion and exclusion from the turnover is as follows. Includes value of all outward supply, taxable, exempt, export, interstate. Obviously, guys, in the point they have given here, this two, but it is irrelevant. It is irrelevant. Why so? Because if you do this, you cannot continue under section 10. If you supply outside the state, you cannot. Obviously, outside the state includes outside the country also. Sir, I didn't supply outside the state, sir. I supplied outside the country, sir. Is it okay? No. Export also not allowed. Okay. But still, it is given as a point. But anyway, it is like a dead point. Why, sir? Because you cannot do this. You cannot have this. Simple. Don't scratch it, but I'm just telling you. I have anyway given students note here of a person's having the same PAN to be computed on all India basis. Okay, nothing special here. Let me come to the exclude part. CGST, SGST, UTGST, IGST. Okay, same thing. Value of inward supplies on which tax is payable under reverse charge. Same thing. Okay, what is special? These 2 points. Value of exempt supply of services provided by way of extending deposits, loans, or advances insofar as the consideration is represented by way of interest or discount. In short, I call it as financial service tax. One more, which is a new thing here. Supplies from the first day of April of the financial year up to the date when such person become liable for registration under this act. Clear? That is the threshold limit for registration. As of now, you might not know what is the threshold limit applicable for this guy. But once we learn registration topic, you will understand. When 10 lakh, when 20 lakh, when 40 lakh. Got it? Yes. I have given on students note here, because in the law what they have given is what I have mentioned in this table. But 2 points are irrelevant there. What is it? That is only for better understanding I have given students note. The value of export and interstate supply are relevant only while determining the aggregate turnover of the preceding financial year. That is to check eligibility. Can I supply outside the state in last year? Yes. But once I come under section 10, I cannot supply. Okay. These values are not relevant for determining the aggregate turnover of the current financial year, in which the composition supplier has opted for composition levy, as is not permitted to make interstate outward supplies and exports in the said financial year. So what you do is, you just put a flower bracket for this and show it here. Even though it is mentioned, actually those 2 points are irrelevant while calculating the turnover in the current year to pay tax. That is export and interstate supplies, people. Okay. I have one illustration for this. Let me read it. Interesting. Please pay attention. You will get full clarity here itself. Determine the aggregate turnover. Please pay attention. Very important. One small change will be there. Determine aggregate turnover of manufacturer for determining tax payable under composition scheme, assuming the threshold limit applicable for registration is 40 lakh. They are only given in the question. Or also tax payable by him under the composition scheme for financial year 25-26. Manufacturer is in the first year of business. Guys, when he is in the first year of business, straight away is eligible. Why? Last year turnover was nil. So straight away is eligible. Okay. Okay. So no history now. No history. Straight away we are getting into 25-26. Okay. That is current year for us. Taxable outward supply 60 lakh. Exempt supply financial 10. Other exempt supply 5. And inward supply 25. What and all should I count, people? Outward supply should I count? Yes. Exempt supply financial should I count? No. Other exempt supply should I count? Yes. So, how much is my aggregate turnover? 60 plus 5. But as we are in the first year of business, up to 40 lakh, I need not pay tax. Up to 40 lakh, I need not pay tax. Guys, if I ask you what is the aggregate turnover to check eligibility, it would have been 65. But now we are calculating the turnover for what? To pay tax. To pay tax. So it would be 65 minus 40. What is this 40 people? Threshold limit for registration. So what is the turnover to pay GST? 25 lakh. 25 lakh. Okay. So on 25 lakh, what is the composition rate applicable for manufacturer? 1%. Pay 1%. Pay 1%. Or if I ask you how much is CGST, how much is SGST? 12,500, 12,500. Is that clear? You can give a breakup also. CGST 12,500, yes, GST 12,500. That is 0.5% each. Got it, huh? Yes. Now listen, now listen. Assume we are now in the next year, 26-27. What is the turnover to check the eligibility, people? Assume I am in 26-27. What is the turnover to check eligibility? How much? 65 lakh. 65 lakh. Why, sir? We should not exclude this for explanation 1. Now we are dealing with what? Explanation 1. Correct? When I am in the next year, I will check this year turnover. For which I should apply explanation 1 or 2 now? Explanation 1. Did explanation 1 allow this? No, no. So when I go to next year, what is the eligibility turnover means? Your answer should be 65 lakh and not 25 lakh. This was only to pay tax, we reduced it. Okay, sir. Next, one more illustration. Same illustration, but one word I have changed. Determine the aggregate turnover of trader. For determining the tax payable under composition scheme, assuming the threshold limit applicable for registration is 40 lakh. Also tax payable by him under composition scheme for financial year 25-26. Okay. Trader is in the first year of business class. Okay. So history is 0. So is he eligible? Straight away eligible. Straight away eligible. So turnover details for the current year 25-26. One by one. Taxable outward supply should be counted? Yes. Exempt supply under that financial service should be counted? No. Other exempt supply should I count it? Yes. As per explanation 2, I should count it. As per explanation 2, I should count it. Inward supply 25 lakh, I should not count it. Okay. So what is the aggregate turnover, guys? Now listen. Now listen. I should apply explanation 2 also. I should apply even section 10.1. 10.1 told what? What is the tax rate for trader? 1% of taxable supplies. Taxable supplies. So to pay tax for a trader, turnover will not include 5 lakh now. Will not include 5 lakh. Sir, above you took, that was for manufacturer. For manufacturer, the tax rate is 1% of the total turnover. 1% of the total turnover. Please observe, one small difference is there. Answer will change entirely. So now what is the turnover, sir? Only 60 lakh. From 60 lakh, should we reduce threshold limit for registration? Yes. So what is the remaining? 20 lakh. So on 20 lakh, 1% comes to 20,000. Hope you guys understood. Sir, what if he is in the 5th or 6th year of business? Then this will not come. So he has to straight away pay 60 lakh into 1%. Got it? Please be careful. This is normally when he has started the business for the first time, newly. For first year, they will give this benefit. Now, by chance, okay, let me take that also. Sir, what if in the first year, the turnover is less than 40 lakhs? Its turnover is only 30 lakh, taxable turnover. No tax. Enjoy. Next year, again, can I reduce 10 lakh? Yes, you can reduce 10 lakh. Because this year, I have reduced only 30 lakh. Remaining was how much? 10 lakh. Can I carry forward that to the next year? Yes, okay. You can do it. But they will not give the question for number of years and all. Don't worry. If by chance in the first year, if our taxable turnover is less than 40 lakh, no tax. No tax. Did you guys get it? Easy. Please be careful. Small difference is there. Here trader, this played a major role. This part, 5 lakh. Because trader will not pay tax on exempt turnover. Where is it given? In 10.1 only. I had explained even in the note. Clear. Manufacturer and restaurant supplier will pay tax 1%, 5% on total turnover. Whereas trader is only on 1% of taxable turnover. Is that clear? Yes. Explanation thorough. Please be careful. If at all, if they want to confuse the student or make it challenging, maybe they will use these explanations to draft the questions. I will just show you once again. Okay, through a chart, a table here. One second. Yeah. See guys, as per explanation 1 and 2, what is different only I have highlighted in pink color. Whatever I have given in black color is as per 2.6, nothing special. Copy paste of 2.6. But as per explanation 1, you have to exclude one more extra thing. What is it? Financial service. Financial service. Same way, as per explanation 2, you have to exclude two things, which I have highlighted in pink color. Rest all is as per section 2.6. So whatever I have given in black color here is as per 2.6, no change in it. But two additional things which I have to exclude here is I have highlighted in pink color. This is as per which explanation? Explanation 2 to section 10. When will you apply explanation 1? When you are calculating the turnover to check the eligibility of last financial year. When will you apply explanation 2 people? When you are calculating the turnover for the current financial year. Why are you calculating it? To pay tax. Actually, we calculate it quarterly, but obviously we need to check yearly also, aggregate. Because at any point, if it crosses like 50 lakh, 75 lakh or 1.5 lakh, I have to move out immediately. I have to move out immediately. Yes, guys. These are all the provisions with respect to composition scheme under section 10. We have covered both the composition schemes. Yes, students, we will now discuss the questions and solve it on composition scheme. Come to the question bank. We have already solved the questions, 5 questions. First 5 questions, which is on RCM, we already covered. Now coming to question number 6. State whether the person is eligible for composition scheme. I have given 3 cases here. I have given the 3 cases. What are those? First one. You can take down later. First listen. I will give time. First one. Sanjana, a casual taxable person engaged in the business of trading toys. Guys, casual taxable person, no matter what they are doing, they are not eligible for composition scheme. They are not eligible for composition scheme, guys. Yes. And one more person. These two people are special. Who are those? Casual taxable person and non-resident taxable person. In short, I call them as CTP, NRTP. As per section 10.2, a casual taxable person is not eligible for composition scheme under section 10. Hence, Sanjana, a casual taxable person engaged in the business of trading toys, is not eligible for composition scheme, guys. Sir, why did you answer from 10.2 point of view? Why not 10.2a? Guys, she is doing trading of toys. If she was eligible, which scheme will she follow? 10.1 or 10.2a now? 10.1. So I have to tell it from 10.1 and 10.2 point of view. Who is not eligible for 10.1? Where is it given? 10.2. The last point, if you remember, it was what? Casual taxable person and non-resident taxable person. Correct? Hello? Yes, I will show it. This one, last point you can see. This is 10.2a. Just a minute. Yes, 10.2 you can see who is not eligible for 10.1 is given in 10.2. Last point, casual taxable person and non-resident taxable person. Coming back to the question. Current Limited is running its business in 2 branches. Coimbatore branch, part of Tamil Nadu, will supply goods to southern states, and Varanasi branch, part of Uttar Pradesh, will supply the goods to northern states, not within the state, other state. Can they do it? No. Composition scheme is not available, guys. As per section 10.2, a composition supplier cannot make interstate outward supplies of goods or services. In the given case, Current Limited is running its business in 2 branches. Coimbatore branch will supply goods to southern states and Varanasi branch to northern state. Can they do it? No. Hence, Current Limited is not eligible for composition scheme as it wants to supply the goods outside the state, because the composition supplier cannot be engaged in interstate outward supply. Last case, C. DN Manufacturers is engaged in the manufacture of chocolates and ice cream in Karnataka. Can they follow composition scheme? No, because they are manufacturing one of the item covered in pack tip. As per section 10(2), a person who is not engaged in the manufacture of ice cream is not who is engaged in the manufacture of ice cream is not eligible for composition scheme, guys, because it is one of the notified goods. It is one of the notified goods. Which is it? Ice cream. Ice cream. Yes. Hence, DN manufacturers is not eligible for composition scheme. Take down. Now we will move to question number 7. Let me read it. Determine whether the supplier in the following cases are eligible for composition levy provided their turnover in the preceding year does not exceed 1.5 crore. That means, guys, we need to check which scheme, 10.1 scheme or 10.2a scheme, 10.1, because this is an hint that we need to check whether the following persons are eligible for 10.1 composition scheme or not. Yeah. Please be careful. 10.1 scheme is different. 10.2a scheme is different. Actually, 10.1 as well as 10.2 both covers the first scheme or team. Whereas 10.2a covers who is not covered under 10.1. First one. Moon Enterprises is engaged in trading of pan masala in Rajasthan and is registered in the same state. Can you do it? Yes. Trading is allowed, not manufacturing. Okay. A supplier engaged in the manufacture of inter alia, because there are number of points, bad tip, but we are focusing only on what is given here, pan masala. Inter alia pan masala during the preceding financial year is not eligible for composition scheme under section 10. However, in the given case, Moon Enterprises is engaged in trading, underline that when you are writing, trading of pan masala. Okay, let me underline. If not, you will forget. Trading of pan masala and not manufacture, and his turnover does not exceed 1.5 crore. Sir, what if he was manufacturing pan masala? Nirma, what if he was manufacturing pan masala? Is he eligible? No, he would not be eligible. One more case is there. Let me read that also. Sugam manufacturers as registered office in Punjab and Haryana and supplied goods in the neighboring states. Dipti state. Neighboring state means same state, next state. Next state. Okay, your neighbor will stay in your house or in their house? Huh? Their house. They will come and go. Guest is okay, but permanent stay is not okay. And whenever they come also, Papa, you will be scolding. Yakandre, they will come not with a good intention. Ali ಏನಾದ್ರು pin ನೋಡಿ. Chala. First one only, one more sentence is there for A. Therefore, Mohan Enterprises is eligible for composition scheme subject to fulfillment of specified conditions. Okay, fine. Coming to B, especially for your neighbors, don't tell, if you already told, okay, you cannot cancel it, don't tell that you are doing this course. Yakandre, every morning they will come and aita, completed on. You need to make them to understand what is this course. See that this doesn't have 3 years, 2 years limit. People can do it for 5 years, 10 years, 50 years also. Okay, please don't question me. Chalo, B. A supplier engaged in interstate outward supply is not eligible for composition scheme under section 10.1. Where is this given, guys? In 10.2. If you remember that section, you can write as per section 10.2. A person who is engaged in interstate outward supply is not eligible for composition scheme under section 10.1. In the given case, Sugam manufacturers is engaged in interstate outward supplies of goods as he supplies goods in neighboring states. Therefore, Sugam manufacturers is not eligible for composition scheme under section 10. Guys. Okay, actually we are answering from 10.1 point of view, but even if they want to follow 10.2a also, not eligible because both has same conditions. Okay, take down. Yeah, now we will do question number 8. Taxpayer Tolaram is a manufacturer having one unit A1 in UP, that is Uttar Pradesh, and another unit, that is branch A2 in MP, that is Madhya Pradesh. Okay, two different branch in two different states. How many registration they would have taken? Minimum 2. Okay. Anyway, I guess they are having only one branch in both the states, so they would have taken two registration. Yes. Can they take same single registration for both Vasant in UP and MP? Yes. Very good. No, because they both are different state. UP, MP ಒಂದೇ state ಅಲ್ಲ ಕಣೋ. ಕ್ವಶನ್ ಕೇಳಲಿಲ್ಲ ಆದ್ರೂ ಆನ್ಸರ್ ಹೇಳ್ಬಿಟ್ಟೆ. ಸಿ in exam answer sheet they will give, but question paper also they will give. Okay na, first they will give question paper for you. ಯಾಕೆ ನೀನ್ ಹಿಂಗ್ ಮಾಡ್ತೀಯ ಅಂತಾನೆ. Okay na, because first 15 minutes will be given to read question paper. ಇಲ್ಲ ಅಂದ್ರೆ like him they will start answering questions without reading question. Chala. Total turnover of 2 units in last financial year, last was 115 lakh. 85 plus 30 lakh, that is in one branch A1 85, A2 30 lakh. Is aggregate turnover within 1.5 crore? Yes. Turnover of unit A1 and A2 in the first quarter of this financial year. Okay, the data given in the current period is only for one quarter. 5 lakh and 10 lakh respectively. Compute the amount payable under the composition levy by taxpayer Tolaram. Guys, who is Tolaram? Manufacturer. Anyway, in the question, actually, they didn't mention about taxable and exempt turnover and all. They have just given turnover. Let us apply it. Amen. Attentive. Be attentive. Yes. So, what is the current turnover in the first quarter of the current year? 5 lakh, 10 lakh. Okay. First, let us explain. Is he eligible first of all? Yes. Because last year turnover is within 1.5 crore. Suppliers who have an aggregate turnover of up to 1.5 crore in the preceding financial year are eligible to opt for composition scheme under section 10 in the current financial year. Sir, how come will you tell 1.5 crore? Why not 75 lakh? UP, MP. Is it a part of special states? Correct. UP, MP. Is it a part of special states? No. So that means what is the limit applicable? 1.5 crore. Chalo. So the tax payable by Tolaram, a manufacturer, is 0.5% CGST, 0.5% SGST of the total turnover in the state as per section 10(1). When? In the current year. In the current year. Okay. So in the current year, what is the turnover in UP, guys? 5 lakh. On that 0.5%, 0.5% comes to 2,500 each. Total is 5,000. Okay. And please, guys, when they have asked you to calculate separately, better do it. Okay, sir, here they just ask amount payable. Can I straight away do the total tax also? Fine. But sometimes they will ask you calculate CGST and SGST. In that case, please give a breakup. Please give a breakup. And you can add one extra column, that is total. That is your choice. Okay, now? Yes. So, coming to A2, that is MP, Madhya Pradesh, 10 lakh. On that 0.5, 0.5 comes to 5,000 each. Total comes to 10,000. So, what is the total GST has to pay to the government in the first quarter, guys? 15,000. That is 5,000, 10,000. And please be careful. See, here, this amount goes to whom? Central government. Whereas this amount goes to whom? UP. And this amount goes to whom? MP. That is Madhya Pradesh. Because they are SGST, guys. Is that? So, should I explain all that? No, I'm just telling you for your better understanding. You just need to do the calculation. But for this kind of question, guys, don't straight away go for calculation. First tell, is he eligible? If yes, how much tax should he pay? As per which section? Then you do the calculation. Then you do the calculation. Now take down. Now let us solve question number 9. Taxpayer Bolaram is a trader. Guys, important word. Is a trader who has opted for composition levy for goods of both taxable as well as exempted goods. Goods exempted by way of notification. Okay. Means he is supplying maybe one goods which is taxable, one goods which is exempt. Can he be covered both under composition scheme? Yes. But when he is paying tax, he will pay 1% tax only on taxable turnover. It has one retail showroom A1 in Punjab and another retail showroom in A2 in Rajasthan. Both selling goods that is taxable as well as exempted goods. Fine. There is no mandate, there is no condition that you cannot sell exempted goods. You can sell it, but you will pay tax only on what? Taxable turnover. And please be careful, exempted goods is different, non-taxable supply is different. Non-taxable supply means outside the GST. For example, assume Bolaram is supplying petrol or alcoholic liquor for human consumption. Can he follow composition scheme? No, not at all. Total turnover, including taxable and exempted goods of the two showroom in the last financial year was 115 lakh, 85 plus 30. Guys, he is operating in two states. Which are those? Punjab and Rajasthan. None of them are special states. None of them are special state. So what is the turnover limit applicable for him? 1.5 crore. In last year, what was his turnover? 115. Within the limit of? Yes. In the current year, is he eligible? Yes. One more thing. Guys, even if the supplier is operating in one special states, totally how many special states are there for section 10? 8. Even if he is operating in one special states, assume this guy, Bolaram, is operating in Punjab and Rajasthan as well as Manipur. What is the threshold limit applicable for him? 75. Now, if all three states put together, if it is more than 75 lakh, he cannot follow composition scheme. Means only in Manipura, in all states, in all states, he has to follow section 9. Hope you understood. Means when 75 lakh is applicable is, even if supplier is operating in any one of the special states, then the threshold limit is not 1.5 crore, it would be 75 lakh. But in this question, not relevant, but good to know. Please be careful. If they test, you should be careful with that. Okay, Punjab and Rajasthan, so it is within 1.5 crore, eligible. Eligibility, tick. Turnover of the showrooms A1 and A2 in the first quarter of the current financial year, why did they give this to pay tax? Is 35 lakhs. A1 15 lakh, in which 5 lakh is from the sale of taxable goods and 10 lakh is from the sale of exempted goods. Guys, should he pay tax on this? No. On exempted goods, no tax for whom? Trader. Okay. So to pay tax, should I take 15 lakh or only 5 lakh? Only 5 lakh. Next, coming to A2, 20 lakh is the total turnover, but 10 lakh is from the sale of taxable goods and 10 lakh is from the sale of exempted goods. So should we take 20 lakh or 10 lakh people? Only 10 lakh. Taxable turnover. Compute the amount payable under the composition levy under section 10.1 as well as 10.2. That is both talks about one only of CGST Act by Bolaram. Answer. First, let us talk about eligibility, then rate also. Suppliers who have an aggregate turnover of up to 1.5 crore in the preceding financial year are eligible to opt for composition scheme under section 10 in the current financial year. Tax payable by Bolaram, a trader, is 0.5% CGST and 0.5% SGST of what people? Taxable turnover in the state as per section 10.1. Key term, taxable turnover. So I am taking only taxable turnover. Can you read that heading properly? Yes, taxable turnover. Computation of amount payable under composition levy by Bolaram. A1, Punjab, 5 lakh, only taxable turnover. Only taxable turnover in the first quarter. CGST 0.5%, SGST 0.5%, which comes to 2,500 each. Total is 5,000. A2, Rajasthan. What is the taxable turnover in Rajasthan? 10 lakh. So 0.5 of 10 lakh comes to 5,000, 5,000. Total is 10,000. So totally how much GST he should pay EMA in the first quarter? How much GST should he pay? 15,000. Got it? And I had already told you how to check it and all. See, this amount has to go to central government, whereas 2,500 will go to Punjab government, 5,000 here will go to Rajasthan government, state governments. Is that clear? Yes. Sir, what if in the same question, Bolaram was a manufacturer? I should take total turnover. So instead of 5 lakh and 10 lakh, I should take 15 lakh and 20 lakh. 15 and 20. Just one word change, that's all. Instead of trader, they have given manufacturer. Hope you understood. Please be careful. We need to take total turnover, that is 15 plus 20, 35. Now please listen. Sir, last year also he has provided exempt goods. Correct. So to calculate aggregate turnover of last year, should we calculate only 85 lakh or should we take full, sir? Full. Because while paying tax only, he will pay it on taxable turnover. To check the eligibility, we should always check the total turnover. Clear? For example, assume. This question anyway will not make much difference, but let me tell it. Listen, from taxable, assume he has 1.4 crore. From exempt, he has 30 lakhs. Is he eligible for composition scheme in the current year? No. Why so? Because it has crossed 1.5 crore. It has crossed 1.5 crore. I repeat, to check the eligibility, should we take only taxable turnover for the trader or total turnover? Total turnover. Total turnover. But one exempt supply we should exclude. What is it? Financial service. One exempt supply we should exclude. Actually, financial service, listen, this is key point. Financial service, you will exclude it to check eligibility turnover. You will also exclude it to calculate the turnover which we calculate to pay tax. Clear? And also, we learned that marginal service, it has to be within certain limits, right? Even for that, financial service should not be counted. That means if I am providing financial service, can I provide how much ever I want? Yes, no limit. No limit. So please remember, this is with respect to financial service people. Okay. Make a note. Take down. First explanation, then calculation. Take down what I dictate. Just below that only you take down. In the above case, if Bolaram, if Bolaram is a manufacturer, comma, then THEN, then he need to pay tax at 1% of the total turnover. 1% of the total turnover. I have given total. If you want, you can also mention 0.5% CGST, 0.5% GST. 1% of the total turnover, that is I.E you can write. That is on 15 lakh. For A1, that is on 15 lakh for A1. A1 is the branch name. A1. A1. Okay, right, state name also. A1 in Punjab. For A1 in Punjab, and on rupees 20 lakh, on rupees 20 lakh for A2 in Rajasthan. For A2 in Rajasthan. Question number 10. Taxpayer Padmavati is a saloon stylist who has opted for composition levy for services having one branch B1 in Vasant Kunj, part of Delhi, and another branch B2 in Gurgaon, part of Haryana. Total turnover of two branches in the last financial year was 45 lakh. That is 25 lakh in Delhi, 20 lakh in Haryana. Total is within 50 lakh. Yes, and please be careful. She is a saloon stylist. Is it covered in 10.1? No, it is not covered in 10.1. And she is not engaged in RTM also, because RTM along with marginal was okay, but she is not doing anything related to RTM. So straight away she has to go and knock the door of what? 10.2A. Turnover of branches B1 and B2 in the first quarter of current financial year is 5 lakh and 10 lakh respectively. That is in the current year to pay tax. Compute the amount payable under the composition levy under section 10.2A of CGST Act 2017 by Padmavati. First explanation. As per section 10(2)(a) of CGST Act 170, a registered person whose aggregate turnover in the preceding financial year is up to 50 lakhs and who is not eligible to pay tax under composition scheme under section 10(1), 10(2), because only who is not eligible for 10(1), 10(2) can come for 10(2)(a), may opt to pay tax at 6%, that is 3% CGST, 3% SGST, on the supplies of goods or services or both, up to what turnover, guys? 50 lakh in the current year. What if she crosses 50 lakh in the current year? She has to immediately go out. In the given case, is Padmavati eligible for composition scheme? Yes, sir. Yes, sir. Because last year her turnover was within 50 lakh, and in the current year she is not ineligible for any reason. So that means she is eligible. Okay. And when they are not given any extra point about other things, guys, sir, what if she supply outside the state and all? You don't assume anything. Please assume positive. Be positive. Okay, now yes, because if there is any violation, they will clearly give it in the question. So what is the tax she has to pay in each state? B1, that is Delhi, on 5 lakh, she has to pay 6%. That is 3% CGST, 3% SGST, 15,000 each. Total comes to 30,000. Then B2, Haryana. What is the turnover in Haryana? 10 lakh. On that, what is the CGST? 3%. 3% SGST, 30,000 each. So the total comes to 60,000. Totally, she has to pay a GST of 90,000 under section 10(2)(a), guys. 10(2)(a). Yes, take down. This was a question on 10(2)(a). Take down. Yes, now we will continue with the 11th question. We have done till 10th. Question number 11. A person availing composition scheme in Haryana during the financial year. Emma, should I tell you in different way? A person availing composition scheme in Haryana during the financial year crosses the turnover of 1.5 crore. Guys, Haryana is a special state or normal state? Normal. What is the threshold limit applicable? 1.5 crore. Okay. So the turnover crosses 1.5 crore during the year. He crosses the turnover of 1.5 crore in December. Will he be allowed to pay tax under composition scheme for the remainder of the year? That is till 31st March. Can he continue under composition scheme? No. Actually, they are not given the date, but as on the day his turnover crosses 1.5 crore, immediately he has to move from 10 to 9, guys. And there is a procedure to be followed. We already discussed it. What is it? He has to file an intimation. He has to give the details of stock in ITC 01. Do you remember? Yes, you need to follow that procedure. As per section 10(3) of CGST Act 117, the option to pay tax under composition scheme as per section 10 lapses from the day on which the aggregate turnover of the person availing the composition scheme during the financial year exceeds the specified limit of 1.5 crore. In the given case, a person availing the composition scheme crosses the turnover of 1.5 crore when in December. Okay, date is not given. If date is given, then we can answer more accurately, telling on that day itself he has to shift to section 9. Therefore, he will not be allowed to pay tax under composition scheme for the remainder of the year, that is till 31st March. Once he crosses the threshold, he is required to file an intimation for withdrawal from a composition scheme in the prescribed form, which is that form number CMP 04. CMP stands for composition, within 7 days of occurrence of such event. Okay, and guys, see, if you remember the form number, please write it. Definitely your answer will have more weightage. Even time, Pujita, if you remember, you have to write it. Okay, for that you have to be attentive in the class, because to remember you should understand first. No, listen here. Now, if by chance, sir, I don't if I don't remember the form number, if I don't remember the form number, or if I don't remember the days, then what will I write? In the prescribed form, within the prescribed time. In the prescribed form, within the prescribed time. This is only better, Allah? No. First choice is always to remember and write it. If by chance, if you don't recollect it in the exam, then instead of writing wrong form number, write in prescribed form within prescribed time. Okay, na Meghana? Every person who has furnished such an intimation may electronically furnish a statement in prescribed form, that is GST ITC 01. ITC stands for Input Tax Credit, containing details of the stock held by him on the date on which the option is withdrawn within a period of 30 days from the date from which the option is withdrawn. Clear? That day exactly is not mentioned. They just told December. So simply tell within 30 days. If by chance, if the date is given, assume 10th December, you tell within 30 days of 10th December. Got it? Guys, it is same like whatever I have already covered. I will just show you through chart. I had covered this, no? Same thing. Okay, whatever I have given here in blue color, same thing is explained now. Yeah, make a note of it. Take down, take down. Yes, now we will do question number 12. Subramanian Enterprises has two registered places of business in Delhi. Okay, in Delhi itself, he has two places. Its aggregate turnover for the preceding financial year for both the places of business put together is 120 lakh. Guys, is Delhi special? No. Normal state. Okay, and it is actually union territory, but for GST, we will treat it as state. Okay, what is the turnover limit applicable for the supplier from Delhi? 1.5 crore. It is within that. It wishes to pay tax under composition levy for one of the place of business in the current year, while under normal levy for the other. Can they do it? No. Actually, they are eligible for composition scheme, but both the businesses, they have to take it under section 10. If not, both under section 9. You're required to advise Subramanian Enterprises whether he can do so. Sorry, no. As per section 10, read with CGST rules, a registered person with an aggregate turnover in a preceding financial year of up to 1.5 crore is eligible for composition levy. The composition scheme, if opted, is applicable for all the businesses under one PAN or none. One PAN, that is under one PAN, both the businesses are covered? Yes. So you have to follow composition scheme for both the business or section 9. In the given case, the aggregate turnover of Subramanian Enterprise does not exceed 1.5 crore in the preceding financial year. Therefore, it is eligible for composition levy in the current year. However, all the registered person having the same PAN have to opt for composition scheme. If one such registered person opts for normal scheme, that is under section 9, others become ineligible for composition scheme. Thus, conclusion. Subramanian Enterprises either have to opt for composition levy for both the places of business or under normal levy for both the place of business. That is, both the business should be either under section 10 or under section 9. Yes, take down. Yes, we'll move to next question. That is question number 13. A photographer Champak has commenced providing photography services in Delhi, normal state, from April this year. And anyway, actually, it is photography services means straight away you will check which composition scheme 10 to A. There will state matter? No. Because for any state, what is the limit? 50 lakh. Is turnover for various quarter for the current year, that is till December, is as follows. April, guys, one thing, please note, listen. In the first line, they have told he commenced the photography services in the current year. That means, what is his turnover in the last year? 0. Straight away eligible, huh? Yes. But for which composition scheme? 10 to A. 10 to A, people. His turnover for the various quarter till December is as follows. April to June, 20 lakh. July to September, 30 lakh. October to December, 20 lakh. They didn't mention it is taxable or exempt. What do you assume? Taxable. Because he is providing only one services, photography. Is photography services exempt? No. Taxable. Taxable, people. Check whether the Champak is eligible for composition levy and determine the tax payable by Champak, considering the normal rate as 18%. Guys, if he is eligible for composition scheme, which composition scheme, Vikram? 10-1 or 10-2A? 10-2A. Under 10 to A, what is the rate? 6%. Okay. Then why did they give 18%? We will see that. We will see that. Guys, listen here. First thing we need to check is eligibility. Is he eligible? Yes, because his last year turnover was 0. In the current year, can he straight away start with composition scheme? Yes. But should he pay tax on entire turnover? No. As it is first year of business, the turnover limit applicable for registration for services is 20 lakhs. 20 lakh. So should he pay tax on first to 20 lakh? No. As per explanation 2. As per explanation 2, up to the threshold limit applicable for registration, should he pay tax? No. So no tax on 20 lakh. Should he pay tax on 30 lakh? Yes. At what rate? At what rate? Divya, what rate? 6%. So here on this it is nil, on this 6%. October to December, how much? 20 lakh. On that, how much? 6%. Very good. 18%. Why so? Because his turnover crosses 50 lakh. By the end of September, his turnover crosses 50 lakh. So he has to go out of section 10. Correct, Ramesh? Ramesh, no urgent in life. First we should understand, then we should take down. Listen here. Listen this. Listen, I repeat. 10 to A is eligible only for you providing services if your turnover is up to 50 lakh. If you cross 50 lakh, not eligible. Not eligible. So in the October to December quarter, can you continue with composition scheme? No. What should you do? Pay tax at normal rate. Pay tax at normal rate. And guys, please be careful. Sir, this is based on what? Aggregate turnover. His aggregate turnover will cross 50 lakh year. Huh? Sir, should I reduce 20 lakh from there? No. That 20 lakh is only for calculating tax. For checking eligibility, should we reduce the threshold limit for registration? No. Please be careful. While paying tax, I will not pay it on 20 lakh. But while checking eligibility, should I count the 20 lakh also? Yes. Clear? For eligibility, will you follow explanation 1 or explanation 2? Arshita, will you follow explanation 1 or explanation 2? Explanation for eligibility, explanation 1. For paying tax, explanation 2. Chalo, fine. Let us see the answer. As per section 10(2)(a) of CGST Act 2017, silence. A registered person whose aggregate turnover in the preceding financial year is up to 50 lakh and who is not eligible to pay tax under composition scheme under section 10(1) and 10(2) may opt to pay tax at 6% 6% total, but in that 3% CGST, 3% SGST on the supplies of goods or services or both up to an aggregate turnover of 50 lakh made during the current financial year subject to specified conditions. Subject to specified condition. What Lubna is writing? What are you writing, madam? Okay, pay attention. You can write later. Pay attention. Huh? Oh Allah. This is what you should write in exam also. Listen. Okay. In the given case, silence. In the given case, since Champak has started the supply of services in the current financial year, his aggregate turnover in the preceding financial year is nil. Consequently, in the current financial year, he is eligible for composition scheme for services. He become eligible for registration when his aggregate turnover crosses 20 lakh. Yes. Actually, did I teach that in this chapter? No. This is actually part of registration chapter, guys. But as of now, just know that for the person who is providing the services, the threshold limit applicable for registration is 20 lakh. Here he is providing photography services. Now, if he is following section 9, when should he get registered? Only when his turnover crosses 20 lakh. But here, should he wait till 20 lakh? No. Because he wants to follow composition scheme. From day 1, he should be registered. But should he pay tax for first to 20 lakh? No, guys. While registering under GST, he straight away opts for composition scheme. Okay. Now, guys, for paying tax, which is the explanation applicable? Explanation 2 to section 10. As per explanation 2 to section 10, for determining its turnover of the state for payment of tax under the composition scheme for services, turnover of April to June quarter, that is nothing but 20 lakh, shall be excluded as the value of supplies from first day of April of the financial year up to the date when such person becomes liable for registration under this act are to be excluded for this purpose. In simple, whatever is the threshold limit applicable for registration, it should not be included, guys. It should not be included. In simple, on the first 20 lakh, no tax. On the next 30 lakh, that is next quarter turnover. On this, should he pay GST? Yes. At what rate? 6%. Turnover of July-September quarter, he shall pay tax at 6%. That is 3% CGST, 3% SGST, which comes to 90,000 each. Next, by the end of July-September quarter, his aggregate turnover reaches 50 lakh. Guys, to check whether it has reached 50 lakh or not, should I check eligibility turnover or tax payable turnover? See, I will pay tax on taxable turnover. That is nothing. Taxable turnover in the sense, as per explanation 2, I am talking about. Clear? But to see eligibility, we will see as per explanation 1. As per explanation 1, should I reduce 20 lakh people? No, I should not. Only one extra thing I have to reduce is financial service. Financial service. So now, did he become ineligible in between the year? Yes. By the end of second quarter, he became ineligible. Exactly end of second quarter. Because his turnover has touched 50 lakh. So up to 50 lakh, okay, composition scheme. Over and above that, you have to go under normal scheme. So in the third quarter, he has to pay tax on the turnover as per normal scheme, guys. Consequently, as per section 10.3, his option to avail composition scheme for services shall lapse by the end of July-September quarter, and thereafter he is required to pay tax at normal rate of 18%. Thus, the tax payable for October-December quarter is 20 lakh into 18%. Sir, how did you get the 20 lakh? Last quarter. Last quarter. Clear? And here date is not important because anyway they have not mentioned the date. And clearly, exactly by the end of second quarter, they have crossed 50 lakh. Clear? Huh? Yes. So for the last quarter, that is actually third quarter here, not fourth quarter, third quarter, whatever is the turnover, 20 lakh on that 18%. Sir, they have not given the turnover for fourth quarter. What if it is given even for that 18%? Even for that 18%, guys. And if it is intra, 9% CGST, 9% SGST. Easy, no? Yes. Sure. And see, here actually the question is on composition scheme, including the explanations. So this I can tell might be the complicated question. If they want to put a challenging question on this topic, might be discussed. Might be this. First you will talk about eligibility, then you will also talk about tax payable. But if by chance in between the year, if he has crossed the limit for eligibility, please make him ineligible for composition scheme. Take down.